Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, February 23rd. We are live. Thank you all for being here. It is snowing heavy in the Northeast. Pretty aggressive. I woke up and did not expect, first of all, I didn't expect the amount of snow we had yesterday, and it's not getting any better. So for all my folks on the Northeast, it's pretty ugly. New York and New Jersey, I think schools and lots of different businesses, public transportation is closed. It's pretty ugly snow, but the markets are still open, and we'll be analyzing what we've got in the equity markets. We are on time. That is correct. Monday morning. Got to be on time on a Monday. We are live. There is so much to talk about. There is so much going on this week. This is, first of all, the last trading week of February. So it's the final week until we enter March, which, again, is kind of crazy. I mean, it feels like the year is indeed flying by, although we've had a tumultuous January and February. And we're ending it off with Nvidia earnings, which will be this week on Wednesday. Going to be a very important earnings. We got a lot to talk about Nvidia. Got a bunch of analyst upgrades and reiterations of their buy targets coming out today. I think we have multiple analysts saying 270. This stock is cheap. It should go higher. And obviously it'll be up to the market, but we're going to see what happens with Nvidia on Wednesday. And hopefully it's a good quarter. And hopefully it's enough to kind of change some of the sentiment around the AI trade in the overall market. Bitcoin took a nasty haircut yesterday, almost below 64,000. It has now recovered to 66. So it definitely felt like it was some Sunday shenanigan algos going back and forth that caused that $3,000 candle down. Since then, it has recovered, not at 67 yet, but a move above 67 would be nice to see, but 66,315. So at least you're holding on to a little bit of that momentum. Robinhood down 2% in the pre-market. Meta is down 1%. Amazon's down 1%. BMR down 2%. Netflix down 1%. You have some new updates in regards to Paramount Sky and a revised offer that they're going to be putting out to Warner Brothers, which once again will open up the question on if Netflix is actually going to be able to get those assets. CoreWeave down 3%, SoFi down 2%, Palantir down 2%, Nebius down 1%, Iren down 2%, Rocket Lab down 2.6%, ASTS down 2%. It is a red pre-market. The futures were red last night. S&P 500 right there down 0.34%. It doesn't feel like a really, really disgusting red. And quite frankly, I would not be surprised if it flips green based on some of the headlines we had in the morning. But we are red to start off Monday, and Nvidia earnings, I think, is going to be the biggest event of this week. And quite frankly, you might not get any real price action until we get those earnings, which means we're going to have to wait a couple days. Also, Trump will have the State of the Union tomorrow. I will be streaming that live tomorrow night. That's going to be an important one. Google is slightly green right there in the pre-markets, up about 0.5%. So we will see what Trump has to say. And for those that missed what happened over the weekend, we'll get right into it. But we've got new tariff news. And well, that tariff news, I think, is the reason for why the pre-markets are red and why the futures were red last night. Lot to talk about. Good morning, good morning, good morning. Thank you again, everyone, for being here. Yes, the Singapore meetup is going to be happening in June. I'll have more updates on that in the coming days, but it will be happening in June, not April. So for all the people that needed some more time, I think it's going to be better for it to be June anyway. So it'll be June. LA meetup link is in the description. Again, that'll be happening March 28th. Very excited to see people there. We'll have a lot of mods that will be out there. So excited for LA, and Singapore will be happening in June. All right, so let's get into it. I think let's start off with a recap of what happened over the weekend and what happened last Friday. Obviously, for those that have been keeping up with the story, the Supreme Court have struck down Trump's tariffs by entirely on a 6-3 decision. And it's kind of crazy how it happened, but nonetheless, it did happen. We were all here on Friday live. I didn't expect it to be 6-3, but it ended up being 6-3. And you essentially had the Supreme Court saying, look, this is unconstitutional under IEEPA. Neil Gorsuch put out a very long opinion saying that if Congress wanted to enact tariffs, then you have to go through the legislative democratic process, and one man can essentially not wield his power to just enforce anything he wants. They went so far to say the refund process is likely to be a mess, acknowledging that, hey, we don't know how the heck you guys are going to refund the tariffs. We don't know what's going to happen here, but it is going to be a pretty weird situation. But we just know that it's unconstitutional. And because it's unconstitutional, the tariffs deserve to not be in place. Having said that, Trump got pretty pissed off about this, and he instituted a 10% global tariff after this decision was announced. He went as far as to say the Supreme Court justices who voted for this are a disgrace to this nation. It's going to be kind of awkward because in the State of the Union, the Supreme Court justices sit right in front of the President of the United States. So I wonder what to say. Also, he had a tweet this morning, which I mean, I was it was quite surprising seeing this, but he said the Supreme Court, and I'll be using lowercase letters for a while based on complete lack of respect. So he's lowercasing the S and the C on Supreme Court because he doesn't respect them anymore. Of the United States accidentally and unwittingly gave me, as he tweeted this morning, as President of the United States, far more powers and strength than I had prior to the ridiculous, dumb, and very internationally divisive ruling. For one thing, I can use licenses to do absolutely terrible things to foreign countries, especially those countries that have been ripping us off for many decades, but incomprehensibly, according to all the rulings, I can't charge them a licensing fee, but all licenses charge fees. Why can't the United States do so? You do get a license to get a fee. The opinion doesn't explain that, but I know the answer. The court also has proved all other tariffs, of which there are many, and they can be used in a much more powerful and obnoxious way with legal certainty than the tariffs were initially used. Our incompetent Supreme Court did a great job for the wrong people, and for that, they should be ashamed of themselves, except the great three. He's talking about Kavanaugh, Alito, and Thomas, who voted for him. The next thing you should know is that they will rule in favor of China and others who are making an absolute fortune on birthright citizenship by saying the 14th Amendment was not written to take care of the babies of slaves, which it was proven as the exact timing of its construction, filing, and ratification, which perfectly coincided with the end of the Civil War. How much better can you do than that? But this Supreme Court will find a way to come to the wrong conclusion, one that, again, will make China and various other nations happy and rich. Let our Supreme Court keep making decisions that are so bad and delirious to the future of our nation. I have a job to do to make America great again. As a result of this sentiment, Trump then increased the 10% global tariff to 15% on Saturday. You can tell he's pissed off. You can tell he's not happy about this, especially since he lowercase the S and the C in the Supreme Court 5 times in that tweet. So Trump's not happy about it. The administration's not happy about it. The damage control that the administration has been doing over the weekend has not really been that effective either. Because, you know, the common argument that they continue to get asked is wait a second, like, what's going to happen to the existing tariffs? How are you guys going to legally implement them? And, you know, there's just not really the best answer. Here's what Besant had to say over the weekend to try to defend these tariffs as well.
Question. Will you refund the roughly $134 billion in revenue taken by these emergency tariffs?
Well, Dana, that's not the big question. Let's just level set here. What the Supreme Court did was a very narrow reading of the president's authority under the IEEPA tariffs. We have other tariff authorities which have been functioning, Section 232 tariffs, Section 301 tariffs. And Dana, when you say it's a big question, that's bad framing because the Supreme Court didn't even address that. The Supreme Court remanded it down to a lower court, and you know we will follow what they say, but that could be weeks or months when we hear them. So the Supreme Court did not address refunds.
Sure, they didn't address refunds. That is clearly going to be up to you, which is why
no, Dana. It is not up to me. It is up to you. It is not up to the administration. It is up to the lower court. Let's just be clear on that.
Okay. Well, the Justice Department told a federal appeals court in this very case last year, if tariffs imposed on plaintiffs during these appeals are ultimately held unlawful, then the government will issue refunds to plaintiffs.
Again, I'm not going to get out ahead of the court. We will follow the court's direction, but as I said, that could be weeks or months away. That decision was not rendered on Friday.
So again, you know, they really don't have the best answer. There's obviously going to be a lot of lawsuits that go into court that are going to make a case for why the refund should be happening. Now, at its core, what the president is noticing right here is that because the Supreme Court, which is the highest law of the land, has officially said, hey, you cannot use IEEPA to justify what you've instituted within tariffs, the Trump administration is like, all right, well, we have Section 112, Section 232, Section 301, all these different sections of different trade acts that came out in the 70s and 80s that we can find a way to then implement to justify the current tariffs that we have in place. The logical conundrum here is that if those justifications were strong enough back in February of last year, the administration would have already used them. They weren't because they all have different exemptions. Some of them only go for 150 days. Some of them only go up to 15%. None of them are the blanket sweeping reciprocal tariffs that IEEPA had the perceived authority for the administration to be able to use, which is why they didn't use all these other different sections a year ago. And so now Trump's coming out and saying, I'm stronger because of this decision. I mean, logically, I don't see how that makes sense, because if these tariffs don't have the same types of essentially foundations to actually be implemented, you're going to get a lot of trade partners that come out and say, wait a second, you guys can't tariff us in the way that you're tariffing us. Your own Supreme Court says that this doesn't make sense. And if you do try to use some of these silly sections in 150 days, by July, these tariffs will be gone. So why should we be taking it seriously? In fact, China's Commerce Ministry came out yesterday. They said China urges the U.S. to scrap unilateral tariffs. We're monitoring the Supreme Court decision, and the U.S. unilateral measures such as fentanyl tariffs violate trade rules. Now, I don't know if necessarily the Chinese Commerce Ministry is going to be correct about this. I don't know if there's going to be some massive renegotiating in terms of the tariffs we have on China from the United States, but this does give them a little bit more leverage. Same thing with the EU, which came out over the weekend, says we're going to try to renegotiate. A Japanese official said the U.S. tariff situation is a mess. India canceled their trip to the United States as they're evaluating more time to think about how to renegotiate tariffs. It just seems like the next year is going to be filled, or 2026 is going to be filled with Trump trying to justify legally why his tariff should be in place. And he's going to be selling that story to the American people. You know, not sure if the American people are going to care that much after months and months of this happening. I mean, you get to waste 1 year doing it. I don't know if you get to waste 2 years doing it, especially if the tariffs end up being not even viable after 150 days based on certain sections that they're being implemented from. So this is going to create another conundrum, I think, for equities, just in terms of the uncertainty that's going to come out. Now, there is an argument that says, well, it's not going to be that big of a deal. And from a more bullish perspective, you had Goldman Sachs come out this morning and they said, hey, look, the tariff thing is not that serious. We know that Trump is kind of, spending a lot of time on this, but at the end of the day, it's not going to be that much of a deal to worry about when inflation. They said after the Supreme Court struck down IEEPA tariffs, Goldman Sachs economists see minimal future tariff-driven inflation. Tariffs have added roughly 0.7 percentage points to core PCE since April, but pass-throughs are slowing. Goldman projects only about 0.1% additional will hit core prices, even if Trump tries to increase the tariff rates using different sections to get people to feel that the tariffs still have an impact. So at its core, I think the takeaway from tariffs is that ultimately, unless Trump tries to go Liberation Day crazy, I think the stock market has kind of priced it in and is moving forward. There will be a lot of logistical challenges for independent small businesses and for our foreign trading partners and the negotiations we have with them, which probably will affect the market to an extent. But I don't know if we go up or down based on this tariff stuff anymore, unless Trump comes out and says, hey, based on Section 332, I can do 50% tariffs, and that's what I'm going to do to show people how powerful I am. If we don't get that, if we just get this kind of 10, 15% global tariff, which quite frankly is actually a little bit less than what some of the other countries had. So it's actually going to not be that counterproductive for some of those countries that were dealing with 25% tariffs, like South Korea, for example, then maybe it's not that big of a deal. Having said that, I think the administration is going to spend a lot of time to try to justify this. And, we're going to have to see how the tariff situation ends up playing out. HIM's earnings is today. This one usually happens earlier in the earnings cycle, so they kind of delayed their earnings. But yeah, it will be happening today. It's up 2% right here. I have no idea what to expect for HIM's earnings. Obviously, the lawsuits have been pretty ugly for them. I do think the stock is sold off a lot, right? So if they had any good news, I think this thing goes higher. If not, it's going to $10, and it's hard to see what their growth rate, this thing trading below $10. But I guess after the bell, we'll see what ends up happening with HIMs. But yeah, that's the only one that has earnings today. Tomorrow we have more earnings. Oh, we did have Domino's in the morning. Let's pull that up real quick. Are we up on Domino's? We are green. 5% on Domino's. Why not? Buffett did add a decent amount to it. Domino's beat by 1% on EPS, beat by 1% on revenue. In this market environment, that's enough. That's all you need, especially if you're a pizza company. If you're a tech company, you could beat by 50%. Your stock's going down, but Domino's, that's all they need. So yeah, that's the situation we've got with tariffs. Don't know how this is going to play out, but at its core, I don't think it's going to have that much of an impact on the market. It's just Trump's political capital is weakening day by day as he tries to force the tariff issue. And, if the tariff issue doesn't end up becoming something that is reasonably implemented, then it's just another year of campaigning for tariffs. Here's the final clip from Besant talking more about why the administration will still be able to implement tariffs.
the Supreme Court said is that the president cannot use the IEPA, the
Right.
Emergency Economic Powers Act, to do this. The president does have other authorities. And as I said, the Section 232 tariffs and the Section 301 tariffs have withstood more than 4,000 lawsuits. So it was very narrow. And it's very interesting that the Supreme Court said that the president can't raise $1 of revenue with tariffs, but he can put on a full embargo. So they reaffirmed his ability to block all trade. He just cannot accept $1 for the trade. And I will tell you, like the tariff revenues, they have come into the Treasury. But more importantly, the ultimate goal of tariffs is rebalancing trade and bringing our trade deficits into balance. We've seen the goods sector, the deficit with our trading partners drop by 17%. We've seen our bilateral deficit with China drop substantially. And we are seeing trillions of investments and factories coming back to the US because of the tariffs.
Again, the administration can try to defend the tariffs as much as they can, but at the end of the day, the Supreme Court struck it down. And it's going to be a very, very long journey, I think, for Trump to be able to justify why these tariffs go in place. But at its core, I don't think tariffs are going to be the story of the next couple months unless Trump goes as aggressive as he went back in April. I think the story is more rooted in Nvidia, which we can transition to because we got a lot of headlines on Nvidia. Nvidia will have earnings on Wednesday. Nvidia right there up about 0.5% in the pre-market. Nvidia's got to crush aggressively in order to get this momentum to keep going. And if they don't, I think that's a bigger threat to the global stock market over Trump, just given how on edge the tech sector has been. I think that's the bigger story. The tariff stuff just creates a lot more issues in terms of trying to figure out how global policy will be conducted. Real quick, before we talk about Nvidia, we did get a bunch of quotes from Waller today. I'm reading them right here. Waller says, all the data for the past year suggests labor demand is falling more than labor supply, which would indicate we should have rate cuts. Waller says, consider his support for a rate cut or hold in March a coin flip that will heavily rely on February jobs data, which we'll be getting in a couple weeks. Not certain how firms will respond to Supreme Court tariff ruling, but do not think it will influence views on appropriate monetary policy. He also says, smoothing through the impact of government shutdown, expect GDP will have around 10% from Q4 to Q1, with consumer spending still solid and industrial activity picking up. We got a lot of Fed speak later this week. Waller, again, is one of the doves that's on the Fed board, and looks like his decision for a rate cut comes down to the jobs data. Again, the minutes that we got last week signaled that the labor market is not the biggest concern and that we should be thinking of a rate hike. Some of the Fed officials mentioned that. Given some of the stuff that has been disclosed over the weekend, it feels like the labor market is the biggest concern in regards to what's going on with blue collar and white collar jobs at the behest of AI. And we got some more updates from Anthropic to talk about. So I don't know, kind of weird that these Fed officials are not seriously looking at what's happening in the labor market. On top of that, you also have two headlines with OpenAI, which I thought was also really interesting. So OpenAI is now partnering with a bunch of different consulting firms, and the goal is to implement AI within the enterprise. This is a pretty obvious thing that they're doing. Accenture, Deloitte, Capgemini, Boston Consulting Group. It looks like they're going to be working with all of them. The partnerships aim to accelerate AI adoption by combining OpenAI's technology with consulting expertise, helping companies integrate AI agents into workflows even faster. OpenAI CFO says that enterprises now account for 40% of its business, expected to reach 50% by year end, which is a good thing because OpenAI definitely needs to be penetrating the enterprise. What happened over the weekend as well was that OpenAI came out, well, not OpenAI, but the information came out and said, based on the projections we've seen for OpenAI and our sources, OpenAI is now projecting $280 billion of revenue by the end of 2030. If that were to happen, that would obviously be a very big deal. The question is, can they get there? They're still going to be losing a lot of money, but this is 27% higher than the previous revenue ambitions. And so, you know, if OpenAI actually gets to these levels, one could imagine what Nvidia would be trading at. But if that's the projection they can get to, if they can get anywhere close to that, same thing with Anthropic, then Google, Meta, Microsoft, all those companies are probably going to be hyperscaling their growth at a very aggressive level. Having said that, all of that likely comes back to Nvidia. What do we got for Nvidia this week? Nvidia is trading at 24 times forward earnings. Its 5-year average is 38 times, Will this compete with Palantir? Yes, I do think OpenAI is trying to compete with Palantir in the enterprise. They've gone so far as to say we are having our own forward deployed engineers. By the way, Palantir did get a $1 billion contract on Friday, kind of went under the radar by the DHS, 5 years, $200 million per year. So they got that contract on Friday after hours. But yeah, I think 100% the foundation model companies are realizing the orchestration layer is where a lot of the value is. Anthropic figured this out pretty easily. ChatGPT is just starting to figure this out. Palantir figured it out years ago. That's why Palantir is growing at 70%. But I do think in the enterprise, they're going to try to compete pretty heavily with some of these other software names. Having said that, all that demand goes back to Nvidia when we're talking about enterprise AI. And I think earnings this week are going to come down to a couple questions. Number one, how large is physical AI? Nvidia's moat against custom ASICs, aka TPUs, if CapEx will continue to grow, and how large is the market ultimately for inference? I think, and I went through Nvidia's numbers over the weekends, and just anecdotally and quantitatively, I think the street is underestimating the amount of growth Nvidia is going to put up. The $500 billion in 5 quarters headline that they said in October, the CFO in January said that has already materially increased. China revenue still a tailwind. TSM earnings increased CapEx by $14 billion, which shows how much demand continues to come in for TSM. Remember, TSM is making the chips for Nvidia. So if TSM has to increase their CapEx, it's because they're getting these massive purchase orders from Nvidia. So not sure where the stock's going to trade, but at 24 times earnings underneath his historical 5-year average of 38 times, it is the cheapest you have to be able to buy Nvidia. And a lot of the analysts tend to agree. So you had a bunch of analysts came out this morning. KeyBank said, hey, 275. We think Nvidia is going to do about $69 billion of revenue. The street's at 65.7. So they have a pretty massive $4 billion beat, which would be insane. And fiscal year Q1 2026 guidance would be 74 to 75 billion. So they are pretty aggressive in their assumptions, and they think their assumptions are going to come to fruition. And then you have a variety of other firms like D.A. Davidson say, hey, 250, you got to buy the stock. 50% growth trajectory is going to continue. Valuation, again, is at historic lows. NVIDIA is the most compelling semi-mega cap versus Broadcom, TSM, AMD, and Intel. And the underpricing of the valuation against the sustained AI demand gives NVIDIA a leg up as one of the best positioned semiconductor names in the entire stock market. So, I mean, the average price target, if you look at it on tip ranks as well, is at, I think, 260. So, I mean, pretty much every 265, pretty much every analyst thinks this thing has about 40% upside from here. And I don't think it's going to get to 265 anytime soon. But the stock being below 200, if they have a triple beat, once again, I think would be pretty criminal. I do think that's very possible. I think it could pump to 210 and then came all the way back down to 205 back to like 190. It could go to 210 to 190, which is almost exactly the same move that I made last time, from 180 to 197, then came back down to 175. Anything is possible, but I think Jensen's going to deliver. And if Jensen delivers, then I think we should have a relatively strong earnings. So put in the chat what people think is going to happen to NVIDIA. Let's do the green or red poll chat on the day. I just think it's hard for them to miss. Like, the stock could go down. I don't think it's going to. They're missing. All the hyperscalers already told us the CapEx projections are going to be incredible. Now, guidance, again, the street is expecting 28% growth. NVIDIA doesn't really give guidance, but they're going to signal it. I think that signal is going to be closer to 40%, if not 45%. If that's the case, there's going to be a material $70 to $100 billion difference between the street expectations and what NVIDIA guides for. And that means I think there's going to be a re-rating that happens. Having said that, I don't know if NVIDIA can get to 210, 220, and the S&P 500 is still going to be below 7,000. So I think NVIDIA is also more rooted in the macro, and the S&P has kind of got to make a move for NVIDIA to make a move, which also means we've got to be, getting out of this tech funk that we've been in over the past 2 months. And I mean, I don't see a world where NVIDIA is 220 and Meta's kind of just stuck at these levels. Amazon's stuck at these levels. I feel like a rising tide will lift all boats. So if NVIDIA doesn't get to those levels, I feel like it's going to be stuck with the rest of the tech sector. But maybe this is the catalyst to get the tech sector to actually make a move. I think they'll triple beat and then dump. Yeah, and that's okay. If it'll suck when it dumps, but if it dumps for a reason outside of a triple beat, that will be much worse. If it dumps on a triple beat, it's like, all right, it's going to dump on a triple beat. And a lot of good companies, unfortunately, have taken hits on some really strong momentum. I just don't think you get as aggressive as a dump if they end up guiding, 10, 15% ahead of the street expectations. Having said that, let's get into some macro charts. Well, hedge funds continue to sell. So we talked about this last week. We got some new data right here from Bloomberg. Hedge funds net sales of global equities hit the fastest pace since April 2025. This is from Goldman Sachs. Net selling through February 19th was 1.4 standard deviations below normal, led by North America and Europe, with short sales driving much of the activity. Financials got dumped the most. Then you had energy, then you had healthcare, and staples were net buys. Despite the selling, hedge fund performance in early 2026 remains pretty solid against the volatility. Now, the opposite data of this is that retail investors continue to buy aggressively. So you're seeing from Bank of America and Goldman Sachs that hedge funds are selling as retail is buying. One of these sectors are going to be right. I think Nvidia will have a lot to say about that on Wednesday, but it's not really uncommon to see hedge funds deleveraging because, we're not in a massive, massive, crazy bull market. Certain sectors are in that type of market, like memory, for example, but not tech. And as a result, you're probably seeing these hedge funds get a lot more defensive and just kind of save their capital for a rainy day if that rainy day ends up happening. Not to mention money market funds increased by 17 billion last week. We now have 7.79 trillion in the money market funds. It's aggressive. It's aggressive. However, one fun stat about the money market funds is that it's at an actual historical low of the total market cap that we've had in money market funds. It's only at about 12%, which is kind of crazy because it's the most amount of money we've had in money market funds for a long time. But the M2 money supply has been increasing. So as a result of the actual money that's in the system, we obviously printed a lot of money during COVID. It's at a historical low based on the percentage of the money that's there. So given we have so much money supply out there, the money market funds increasing is not that surprising. Having said that, there still is a lot of money on the sidelines. And that is one of those things where if we were to get any massive pain, you would imagine those money market funds would potentially be deployed. Also, Berkshire Hathaway, we got this new update over the weekend, $382 billion in cash for Mr. Buffett. $382 billion. They have enough to buy pretty much all of the S&P 500 companies outside of the Max 7. Also, you look at their market cap. Berkshire is at 1.07 trillion. You take out 382 billion cash. Their enterprise value is 688 billion. Their public stocks are only worth about 274 billion. So that means for 414 billion, you can get all the other Geico, Dairy Queens, See's Candies, etc. And one could argue Berkshire is relatively cheap, given the amount of cash they have and given the discount to their public equities compared to their private portfolio. But Buffett continues to hoard a decent chunk of cash right now. We got a headline right here. U.S. orders non-emergency U.S. government personnel, eligible family members from U.S. Embassy Beirut. Senior State Department official. Last time this happened, Iran was bombed. Wow. Okay, so you're getting a lot more of these emergency orders coming out in the Middle East. A lot of them happened over the weekend, telling people to either leave Iran or stay indoors. In terms of updates with Iran, we talked about it last night, but the foreign ministry has suggested a very positive tune with the United States, saying that they are willing to work with the U.S. and that they're willing to engage in, diplomatic talks and, not necessarily signal military action. The problem is the Trump administration has said, we also want to have diplomatic talks, but we want to do that under the guise of not having the nuclear program be set in place. And Iran has unequivocally said, no, we are going to keep our nuclear program in place. So, all the headlines we saw last week were the United States ramping up the military presence they had in Iran, or at least closer to the Middle East in parts of Iran. These diplomacy headlines are encouraging to see, but if the diplomatic headlines are contingent on getting rid of the nuclear program, which Trump literally said on Air Force One on Friday that you could say, quote unquote, I'm considering a strike on Iran. If they don't unequivocally say we're going to get rid of our nuclear program, it feels like a strike is inevitable. Having said that, it feels also like it's negotiating, it's posturing. Maybe there's a deeper question or a deeper set of questions that's being asked by the Iranian officials before any type of strike is invoked. Microsoft right there down another 0.5% pre-market. But as of now, we don't really know if the U.S. is meaningfully going to attack. S&P trying to go green in the pre-market, still down about 0.27, 687.54. We were green on Friday by a nice amount to almost touch 690 on the close. Right now, we are red again. About 56% of you said we will have a red day today versus green. Again, futures were red. So if that continues into the market open, it would not be that surprising. So overall, Nvidia on Wednesday, going to be very, very important. I'll be live as always. We'll try to see what happens with Nvidia. They're going to have to really put up the numbers that get the street to be excited. And, you know, if they don't, then I think we're going to have broader issues. And again, on Trump's 15% tariffs, we showed this graphic last week, but these are all the different statutory authorities that Trump has to impose tariffs outside of IEEPA, which once again, the Supreme Court said, no, you are not allowed to implement in that manner. And this is what Trump is using. Some of this stuff allows a lot of different tariff rates. You have to have certain justifications like investigations into unfair practices in order, or like discrimination against U.S. commerce on Section 338 in order to implement these tariffs. And I would imagine his legal team will now be working hard to get this out there. You know, what's interesting is I did some research over the weekend. Obama's landmark policy in 2010 was the Affordable Care Act. And by 2012, 2 years later, when he was running for a second term, it was challenged in the Supreme Court. And on a 5-4 decision, the Supreme Court upheld the individual mandate on the Affordable Care Act. If that 5-4 went the other way, we would likely not have the Affordable Care Act in the way that we have it today. And it got challenged multiple other times in court and also was struck down. So it is not weird for a president's landmark signature policy, even if it, you know, and Obama got 2/3 of Congress to vote on that, even if you get the majority of Congress to vote on something, to still be challenged in court. Like the Supreme Court takes up a lot of different cases. It's just this did not go in the favor of Trump. And the worst part about it is 2 of his Supreme Court justices that he picked in 2017 went against him. If he had gotten them, Barrett and Gorsuch, he would have won. And it would have been 5-4 to uphold the tariffs. It just ended up being 6-3 in the opposite direction. So it's one of those things where historically, yeah, major landmark policies have been challenged in court. And 1 or 2 votes determines the trajectory of an entire country. And in this case, it went the opposite direction for Trump. So time will tell what happens with the tariffs, but it looks like there's going to be a lot more headlines for what we have to deal with tariffs over the coming weeks. Meta right there is down about 1%. Amazon's down 1%. Silver and gold are continuing to catch a bid. Why? Because we have a lot of more instability. Over the weekend, one of Mexico's largest cartel leaders was killed in a U.S. military and Mexico military operation together. That has wreaked havoc in the Mexican streets. You have the CJNC cartel going crazy. They're burning down supermarkets. They're killing civilians in the streets. They're burning down cars. So that has led to a lot of different volatility over the weekend, and gold and silver seeing to be a little bit of a safe haven. Not to mention all the tariff news, I think, is what's pumping gold and silver as well. But you know, just lots and lots of different things going back and forth, which are obviously impacting how the market's reacting to this stuff, but also, you know, where the market has the trajectory to go when you have all these different geopolitical headlines. Now, Citigroup continues to be pretty bullish. Citi maintains a positive 2026 outlook, citing strong Q4 earnings, accelerating large cap sales, and stable S&P 500 earnings estimates. They are indicating earnings of 320 on the S&P for 2026, which if we give that a 25 multiple, right now the S&P is trading at 29 times. If we break that down to 25 but get earnings of 320, you're at 8,000 on the S&P. So I mean, the broader bull case for the S&P is not necessarily weakening by any sense. It's just you have these violent whipsaw headlines that are taking things down aggressively. And one of the ones that we had over the weekend, which by the way, H100 rental prices are continuing to go higher. So again, the Nvidia demand story just looks very, very strong as generations of GPUs from years ago are still catching a bid because there's just so much demand for compute. But speaking of compute, Anthropic put out another headline over the weekend, and that is what ended up hurting some of the stocks that, well, we thought couldn't be hurt. Anthropic came out with a headline that says, hey, we are working on Claude code security. And yeah, as soon as they said that we can scan code bases for vulnerabilities and suggest targeted software patches for human review, this video got 25 million views. CrowdStrike went down 8%. So it's like, you know, you would think that, okay, at least freaking CrowdStrike and Palo Alto are safe from the SaaS sell-off. They'll probably get sold off because they're in the bucket of SaaS names, but at least they're not going to be thrown into AI is going to kill them. Nope. They're getting thrown into AI is going to kill them. It went so far to CrowdStrike down even more in the pre-market. George Kurtz, the CEO of CrowdStrike, came out and he literally said, I asked Claude if they could replicate CrowdStrike, and Claude literally said that they can't do it. So maybe people should stop paying attention to these headlines. He was joking, but he was also kind of annoyed that his stock just lost 10% of value because Claude tweeted that they're focusing on security, not focusing on the $5 billion of revenue that CrowdStrike brings in from endpoint security, but they're focused on scanning a code base, which is something that CrowdStrike can do, but it is fundamentally not everything that CrowdStrike does. Just the perception, though, that Claude's eventually going to eat into endpoint security and what Palo Alto is doing, it's leading to the downside of these stocks. Yeah, that happened on Friday I think it was like right before it was like an hour before the market closed. Claude posted that picture and then boom, CrowdStrike fell, Palo Alto fell, Zscaler fell, all these names. Palo Alto down again in the pre-markets. It's kind of incredible that this is how it's happening, but this is what's taking place, which leads me to the next topic. Some people might have read this over the weekend, but Citrini Research, which is a popular Substack that publishes like macro thoughts, they came out with a pretty thought-provoking article. This article got like 20 million views. And the entire concept of the article was that in 2028, let's imagine a world in which AI was so good that things completely fell apart in the global economy. And the argument right here by Citrini is that unemployment can get to 10%. The market will sell off 40% from the S&P highs of October 2026. I'll leave the article in the chat. But if you go deeper into the article, basically it's saying AI became so good that it ruined the demand for labor. It put costs of goods and services down significantly from a deflationary aspect, but no one has a job to be able to afford these things. Mortgages completely go under because, the idea of a 30-year mortgage is premised on the concept that you will have a job for 30 years if you lose your job. The mortgages that were underwritten with that assumption completely get defaulted. And it paints a pretty ugly image of what the world will look like. Now, I don't know if that's how the world will look like. Celsius right there getting a little pump up about 2% in the pre-market, but it is a thought-provoking piece around the world that we get into where AI takes over. And I think what we're seeing in the SaaS space is a sort of mini version of that article happening in reality, which is AI is so good, which should imply that Nvidia is going a lot higher, that these application layer companies, the Paths, the Salesforces, the ServiceNows of the world, are not going to be able to generate the level of momentum and revenue growth that they were historically used to, or the margins, simply because the foundation model companies not only control the model that all these application companies want to use, but now they're going after the application layer. And if they're going after the application layer, it's going to be very, very difficult for those companies to necessarily survive, which is obviously what CrowdStrike or what Anthropic is going after, right? They are trying to go for the applications that make SaaS valuable, not just be the API that is in the back end of these SaaS companies. They're going to make a lot of money as the API, but if they control the end-to-end stack and then they control the customer, they're going to make a lot more money. So I thought it was an interesting piece. The article definitely went viral, and it's definitely painting a bear case of AI. Now, again, I still heavily believe that AI is going to be more of an age of abundance, but it's hard to imagine that jobs won't get replaced. The question is, will we have more jobs that end up being created versus the jobs that are replaced? Robinhood right there, that's down about 1.6%. Meta's down, Amazon's down. You're seeing a bunch of these names get hit in the pre-market still. What do you think about Palantir versus OpenAI Frontier? We talked about this yesterday. OpenAI Frontier kind of went under the radar. A lot of people didn't hear about this back in early February. But this is essentially OpenAI's response to the enterprise for AI. I mean, you can see from their website right here, OpenAI for deployed engineers, sure we've heard that before, will be paired with your teams working side by side to help you develop the best practices to build and run agents in production. If you go through this website, they're essentially describing an ontology. I mean, at its core, they are trying to show, even this chart right here looks very similar to various charts we've seen of Palantir's ontology, where they are trying to implement from the application layer to the contextual layer to the tribal knowledge layer, then to the business intelligence execution layer, context of the business, and use agentic workflows along with their forward deployed engineers to make this happen. So I don't think this is a bad thing for Palantir. This is a good thing. It means that the foundation model companies are recognizing the value is in the orchestration of the model within the enterprise and not just the model itself. I think, this is something that hit OpenAI like a brick over the past 7 months after seeing Anthropic's momentum in the enterprise. Anthropic, I think, figured this out a while ago. Palantir has known this for a minute now. And all these companies are competing for the enterprise. Having said that, with all these companies competing for enterprise workflows, with ChatGPT hitting 910 million weekly active users, we got that update over the weekend, and with the hyperscalers having more cloud compute than they can, or more cloud demand than they can imagine, to the point where the AWS CEO is saying, if we had more GPUs, we could sell more compute. All of that should be bullish for the AI narrative. And if there is a top to Nvidia, it's going to be in the CapEx cycle slowing down. The question becomes, do you believe it slows down in the next 1 or 2 years? And I think it eventually will slow down. I don't know if it slows down in the next 2 years. And if it doesn't slow down in the next 2 years, because this AI transformation that we're seeing still is so damn powerful, even if Google's stock price goes down because shareholders are demanding cost rationalization, if this is the opportunity for growth over the next decade, they're going to cut things, but I don't think they're going to cut their CapEx projections. And if they do cut their CapEx projections, it's not going to be as dramatically as people think, because at the end of the day, this is what's leading to the growth. I think that's the thing that the market's discounting the most. It's like the reason people are spending on CapEx is because they're growing. As soon as they stop growing, then the CapEx becomes completely irrelevant, which, Oracle, the question is, can they actually grow that much, which is why their CapEx is being discounted so much and their credit default swaps are spiking. But if the rest of big tech continues to show the growth rates, Meta again at 30%, the CapEx is more than justified. The question is going to be, if that ends up playing out. Fed's Waller says CEOs say significant job cuts are coming from AI. Yeah, again, the Waller was pretty, not hawkish this morning, but he was definitely a little bit of a doomer around these AI jobs, which is actually a good thing for rate cuts, because if you're scared of jobs being taken away, then we should be cutting rate cuts. Probabilities for rate cuts for some reason went down yesterday. It's at 4.1%. I guess the market does not believe we have any issues around the labor market, or the market, PCE was higher than expected on Friday, which was not a good thing, is more concerned about inflation. The tariffs going away kind of has not really calmed down any of those concerns around inflation, or else you would think the rate cut probabilities would go higher. But we are still at 4.1% right here. Now, again, eventually we're going to get these rate cuts, even if it's without Powell, but it's likely not coming over the next couple months. And so that's what we're going to have to work with. Hopefully we end up seeing some momentum change in the opposite direction. But as of now, I think Nvidia earnings will be determining anything. DRAM prices, by the way, for those that are in memory, I read a lot of bullish memory articles over the weekend. I mean, you got the big guys saying SanDisk is going to 1,000, Micron's going to 600. Again, do you buy into the momentum, or do you kind of let it play out? SanDisk up another 2% in the pre-market. SanDisk, by the way, diluted by $3.5 billion last Wednesday, and still their stock is at 660. Like, the memory explosion is just incredible. And that's leading to a lot of people to feel that they need to get more leverage into South Korea. South Korean stocks are actually trading at a discount to the global tech average, but they're growing faster. So the largest companies in the EWI ETF, which is Samsung and SK Hynix, are trading at 8.7x forward PE. The global tech average is 19x, but they're growing way faster than most of these tech stocks. So if you're buying Korea or getting exposure to Korea, you're essentially buying memory from Samsung and SK Hynix. And once again, the question becomes, is the discount that they're trading at justified because of the cyclical nature of memory? Or should you avoid the concerns around cyclicality because we are in this massive cycle around AI and data centers? And by the way, I think the easiest way to play memory as well is just to buy Nvidia, because the only reason for this memory demand is because of Nvidia, because of data center demand. So eventually the market will catch up to that. Right now, the market's giving the benefit of the doubt supremely to the memory names, which is why it's outperformed Nvidia. But I think an easy way to sleep well at night is own Nvidia, and you have exposure to the broader AI sector, and the memory demand will match the GPU demand, which should naturally increase the EPS multiple that we have for Nvidia. All right, here we go, folks. 20 seconds. Thank you, everybody, for being here Monday morning. We had a green day on Friday, had a red futures, Nvidia getting a 191 print in the pre-market. Let's see if we can get this momentum to continue. 2 more days till Nvidia earnings, and then we will keep going from there. It is 9:30 Monday, February 23rd. The stock market is now open. All right, wake your ass up. Let's get into it. Nvidia 191.50 opens green on the day by about 1%. Not too bad to see Nvidia getting that momentum. S&P 500 very close to going green. It was red yesterday. It was down almost 0.7, 0.8%. Now it's barely down 0.1% right here. Let's see if that flips green. Wow, Nvidia 193, a huge open. This is, folks, the pre-earnings pump for Nvidia. And I love this, not because the stock is going up, but because if the stock is at like 196, 197 before earnings and it goes down, it'll go back to where it was last week. Whereas if the stock was at like 185 and then it goes down, then it's going, it's making lows below 170. So if we do get a dump from a higher level, we'll go back to where we were. And if we keep the pump, we keep the pump. So I actually like this setup going into earnings. 193.60 right there. That's up about 2%. HIMS, that's down 0.5%. Google at 317. Where is SoFi? Why can't SoFi stock go up? What is going on? 1858, that's down 2.3%. Palantir got a nasty red candle right into the print. It looks like Nvidia is actually the only thing that's holding on to a lot of momentum. Everything else is, SanDisk just went red. Celsius holding on to a little bit of green. S&P still red. Oh man, I don't know if Nvidia holds this red if we're seeing this type of a sell-off across tech. AMD down 3%. Wow. Oracle down 3%. Opendoor is up 5%. Adobe down 2%. Salesforce down 4%. My goodness. This thing was actually up last night. Could not catch a bid. Robinhood's probably down. Robinhood, that's down 2%. Palantir fell right below 130, 129.50. I think Palantir is actually getting caught up in the software stuff. Let's go to the software names. I think all the software names given Adobe and Salesforce are getting hit. Yeah, look at the left-hand side of my screen. Confluent, Oracle, Salesforce, Team, Atlassian, Adobe, ServiceNow down 4%. Palantir down 4%. Datadog down 4%. Twilio down 3%. GitLab down 5%. Once again, I guess the market woke up Monday, February 23rd and said, yeah, we don't like software. We don't freaking like software. And these names are getting hit. Nvidia, S&P just went green. Wow, S&P going green on this. Nvidia is actually pushing 194. I guess it's Nvidia and semis that are leading the way for the S&P right here. How about Meta? Meta is almost green. Google is green. That's helping the S&P. Tesla is red, 405. That one's actually down 2%. I would imagine Amazon slightly green. Amazon, nope. Amazon's red. That's down 1.3%. How about Apple? Apple is, wow, look at Apple. 267 immediately going the opposite of the other tech names as Nvidia tries to hit 194, S&P at 689. So Nvidia and Apple, Meta, Google helping the broader S&P 500 right here. AMD still getting hit, 196. That's down 2%. How about Zeta? Zeta is down 4%. Once again, they are a SaaS name, unfortunately, even if they have good earnings tomorrow. I mean, these SaaS names are just so algorithmically controlled. It's hard to imagine them not going up or going down together. CoreWeave goes red. Iren slightly green. Nebula slightly green. Again, the hyperscalers are green, but the neo clouds are red. Part of this is because of a headline from CoreWeave and Blue Owl last week that Blue Owl couldn't find $4 billion of debt to sell for CoreWeave. I don't know if that's necessarily the most bearish headline, but that definitely got the street to think that maybe CoreWeave's debt is becoming too much of an issue. Applied Digital, that's also down 1.2%. Why is Novo tanking? What was the headline on Novo today? 14%. What the heck happened with Novo? Novo said its CagriSema experimental obesity treatment failed to beat the weight loss delivered by Eli Lilly's Zepbound in a head-to-head study. Damn, that sucks. That sucks. They have to admit that too. They have to straight up admit, yeah, we cannot beat our competitor. Oh my, 14% down. Once again, this is what it means to own pharmaceuticals. You get some of these trial results, it doesn't come out in the right direction. Novo was actually having a good year too. It was up 15% back in mid-January. Completely got wrecked. How about HIMS, which does have earnings today? HIMS is flat. XLE and oil is up. Now, part of the reason I think oil is pumping again is on headlines of Iranian strikes. I don't know if oil is the best long right now if we end up not striking. Because, like, literally, from my understanding, the only reason oil even got over 70 last week is because of threats of the Strait of Hormuz being closed down, the United States getting into a legit war with Iran. If those threats fade down, I don't know if the oil companies continue to catch the bid that they've been catching over the past 2 weeks. So it's one of those things I think you need a little bit more data on before you super go long oil. Wow, Microsoft, is this the lowest all year? No, 389, but we are awfully close. We hit 389 back in February 5th. We're at 392. We're at 392. Vikings tanking 11% because of Novo, unfortunately. Yeah, VKT. Oh, no, it's up 15%. Yeah, it should be going the opposite. So Viking is up 12%. Novo's getting hit down about 15%. Netflix is, wow, 75.70, down 3.5. Trump did say over the weekend that Netflix should be firing Susan Rice from their board because she is instituting woke content on Netflix. I didn't even know Susan Rice was on the board of Netflix. But I think the reason Netflix is down is not really because of that Trump tweet. Paramount is likely to offer $32 in cash. And that headline came out this morning. I don't know if Netflix is going to increase their offer if Paramount's actually going for $32 in cash. Now, Netflix will get a nice $3 billion breakup fee if Warner Brothers ends up picking Paramount, which will be, a third of their net income. So I don't think the street would be too upset about that. But they would be missing out on all the legendary content that they say they need to acquire to get their next phase of growth, which could also be a headwind. Robinhood, that's down 3%. Palantir down 4.8%. SoFi down 2.2% right here. So I think that's the broader reason why Netflix is tanking. Oh, we got a Trump tweet. All right, here we go. Any country that wants to, quote unquote, play games with the ridiculous Supreme Court decision. Once again, he lowered the S and the C on Supreme Court to show his disrespect for them. Especially those that have ripped off the USA for years and even decades will be met with a much higher tariff and worse than that which they recently agreed to. Buyer beware. Thank you for your attention to this matter. Okay, obviously Trump is trying to get the global population to realize that just because the Supreme Court went against them doesn't mean they have leverage here. Now, again, the Supreme Court is the highest authority of the United States. Like, if you're another country, you're definitely going to think you have a little bit of leverage. And see, we were talking about this in the morning. I think the markets are kind of immune to the tariff stuff just because of the net impact of it. But if Trump decides to go Liberation Day 2.0 to assert his authority of how much he cares about the national security of the United States being exemplified via tariffs, Bitcoin right there, 65.8, then maybe things get ugly. Maybe things get uglier. And so time will tell, but that is the latest tweet by Mr. Trump. Oracle getting wrecked right here, down 3%. Celsius, again, they had some good stuff to say last week with their Pepsi partnership. That's why the stock pumped 9%, up about 1.2% right here. But most of tech is red. Also, utilities and defensives are red. Costco's red. Deere is red. Financials are red. JP Morgan's red. PayPal's red. Figma down 8%. Figma was up 30% last week. Dude, this SaaS apocalypse is just app-loving. This thing was at 450 last week, right back to 387. You cannot buy a SaaS dip in any meaningful way and think you've caught the bottom. Like, this is incredible. App-loving down 7.3% after a potential OpenAI headline that was super bullish for app-loving, which got it to 450 last week. Continues to get hit. Amcor, that's down 1%. Intuit down another 3.5%. Intuit stock year to date. Dude, this is, I don't think I've seen this before. 40%? Are you kidding me? Lost $100 billion in market cap off nothing other than Anthropic potentially vibe coding a tax assistant, which I'm not saying there shouldn't be a discount applied to Intuit because of that threat. But 40% of market value wiped out. Not because of earnings, not because of revenue growth, not because the company sets it, not because the CEO stepped down, literally because of fears around AI. That is crazy. IGV has got to be down today. IGV, wow, I think this is the lowest all year. This has got to be, this is the lowest all year. 77.83 on IGV. This is the lowest all year on SaaS. This is the lowest all year. 2022 or 2026, which one are you choosing to go through? You know, I think there are still arguments for why 2026 doesn't end up becoming 2022. There's a lot of similarities we're already seeing across the board. One of the biggest similarities outside of it being a midterm year, which we talked about the historical precedent around that, is that good earnings are being sold off. Now, 2022, you didn't have that many good earnings, but any level of momentum you did have on earnings did get sold off. 2026, you were getting phenomenal earnings, at least so far. We'll see what happens the rest of the year. They're just not catching the bid. The reason I, once again, don't think it's as easily going to be 2022 is simply because of the fact that the Fed will be cutting inevitably in a couple months. That's going to be a tailwind. And if earnings hold up, even if stock prices don't, like Palantir and Hood can keep tanking, Rocklab can keep tanking, but if those companies put up serious growth, it's not exactly the same as the over-bloated COVID inflated companies of 22 that literally needed to fire 20,000 people just to get back on track. That is the difference. Having said that, the tariff volatility opens up a new question. Geopolitical stuff with Iran opens up a new question. And then the AI bubble stuff opens up another new question that we didn't have in 2022. And that's why NVIDIA earnings are going to be so important to potentially counteract a lot of that narrative. But even if NVIDIA does counteract that narrative, at this point, the market has kind of made up their mind about how they want to treat some of these names. G-Rail down another 14% after being down 15% last week. Duolingo is almost below 100, down 5% today. My goodness. Salesforce down 4%. You're talking about capital just eviscerating from these names. Adobe, 249. 255 was last week. That was the lowest in September of 22. We are now losing September 22 levels. I mean, we are almost at August 2022 levels when you look at the chart on Adobe. 249. Goodness gracious. Novo down 14%. Nvidia, are we at least holding up? Nvidia, she's trying to hold up right there, 192. If she loses 190, then look out below. S&P is probably going to fall, but Nvidia's holding it. Google is still green. Yes, barely. Meta went red. Amazon went red by 2%. Tesla, $3 away from below 400. And then what's the other one? Microsoft, are we below 390? We are below 390. Wow. Wow. I guess you could say stocks are also reacting to this global 15% tariff, which again is kind of a net, I think, from the previous tariffs. We had Rocklab trying to get back above 70, but still the lack of clarity and obviously the lack of certainty around what's happening right here, definitely creating a lot more pain. Again, Trump tweeted, any country that wants to play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years, will be met with a much higher tariff and worse than what they recently agreed to. That's also probably not making the market. I'm so excited. Bookings down 5%. Wow. Did you talk about the AI Doom article? Yes, we talked about it in the morning. Again, I also thought the article was getting too much hate over the weekend. A lot of people felt like it was like too doomeristic and too aggressive. And I was like, it's just a different perspective. And the perspective is actually bullish on AI. It's just like, hey, here might be some unintended consequences of AI. But the funny thing about the people that were hating on the article is that we are seeing the article happen in real time in software. Maybe we're not seeing it in the labor market yet, which was kind of the core premise of the article. But in software, AI is so good that Duolingo should be extinct. Salesforce should be extinct. Adobe shouldn't matter. Like, that's how these companies are being priced. Now, I don't think the market is selling off based on that article, although that article did go pretty viral. But wow, CrowdStrike down another 6%. I think the SaaS names, which were already under pressure for the past 3 weeks, are just feeling the worst of it today. I think, quite frankly, not because of the article. Maybe the article played a role in it, but I think it's because the Anthropic cybersecurity demo they put out over the weekend, that got the market to think, damn, there's really no place to hide when it comes to SaaS, and we just need to get the hell out. And maybe that's creating more pain. CrowdStrike losing another $20 billion in value. S&P down 0.5% as well. Again, the S&P is getting hit. Why isn't Apple falling? Usually, I feel like the market goes into Apple when you see this type of aggressive growth stock sell-off. Just because, Apple, iPhones, and laptops will always be safe. Also, the Mac Mini, based on this I didn't know OpenClaw can only run on the Mac Mini, so Mac Mini demand is going crazy because of that as well. But Apple also was down 5% last week on delays of Siri rumors. So it's not like Apple's immune to any of this. Google and Nvidia are the only stocks that are green right now in the tech sector. Everything else just getting hit. Open Door barely up 1.3%. Walmart up a little bit. Yeah, also Apple doesn't have AI CapEx, which is a good thing. It can run on any computer, but people use Mac Mini to isolate it. Okay, yeah, that's actually correct. It can run on any computer, but based on what we were hearing yesterday, Mac Mini can isolate a lot of the orchestration layer. AppLovin, by the way, 9% here. Goodness. Again, for people who bought the AppLovin dip last week, feeling pretty good because it went to 440. It's just unfortunate that these things cannot hold and there is no safety. And quite frankly, I didn't think people were crazy for buying the AppLovin dip last week. Like at some point, you have to step in if you believed in the multiple, the growth rate, the earnings projection. But it's just not enough to withstand the SaaS apocalypse. SanDisk, is that going higher? SanDisk is going higher, 672. Memory, silver, gold, and Nvidia. That's it. If you want safety, that's your perceived safety. Memory, silver, gold, Nvidia. Everything else is just like, who knows? Who freaking knows? CoreWeave, a little green right there. That's up 2%. Nebula is trying to get back above 100. New York Times, Iran's leaders don't believe that once they capitulate, the U.S. will alleviate the pressure. They believe that would only encourage the U.S. to go for the jugular. See, headlines like that continue to make the market believe that the U.S. is seriously going to have to confront Iran and diplomacy is not going to be in action here. D-Wave down about 0.5% as well. VG down about 0.21%. Mac is popular for OpenClaw because it has unified memory. It's the easiest platform to access a large amount of RAM, which means you can run local models and avoid the cloud. Yeah, I mean, we were learning a lot more about OpenClaw last night. I haven't deployed an agent yet. I want to try it out, just, make something really simple and see what it feels like. But it has gone viral. It has increased a lot more demand for those Mac Minis. And I mean, it's a reason why OpenAI acquired the founder of the open source project itself. And it, once again, adds to the threat of like, hey, if, OpenClaw can handle your meeting summaries, like, do you need to pay for Zoom's AI meeting companion that transcribes the summaries and then gives you, or transcribes the voice recordings and then gives you an AI summary if your AI agent can just hook up to Zoom and do it itself without having to pay the extra $10 a month for Zoom's AI feature? Like, that is the argument for why SaaS might be getting ready to lose out on a lot of additional revenues, and all those revenues are going to go to OpenAI and at Anthropic. Salesforce down almost 5% right here as this one continues to get hit. Verizon going green. That's your safety as well. Telecommunications in a world where SaaS gets sold off. Elf Beauty, that's down 2.3%. Estee Lauder is down 0.5%. Lennar is down 1%. Housing supply in the United States is at its lowest level in 20 years. Also, new home sales are at their lowest level since 2010. So the housing sector not really catching a bid right here. Obviously, mortgage rates need to come down for this to be a bit more exciting. Corning, GLW, is that green? GLW is green, 2.6, another AI infrastructure play. Once again, the tweet by Trump is that any country that wants to play games because of the Supreme Court will be faced with consequences. I guess the street is now trying to figure out how to price that in as well. Apple's at 264, Tesla 403, Open Door just went red. Norwegian, that's down 0.5%. AppLovin down 7.6. Let's see if any of this bleeding stops. We'll see when Microsoft reverses the SaaS sell-off, probably maybe puts a bottom in for the day. But that might take a lot more time. Usually Microsoft leads the rally when it comes back. I'm not saying there has to be a rally, but maybe there's at least a stop to the bleeding. But Microsoft, 387.30. goodness, dude. What's the news on Microsoft? There is no news on Microsoft. It's Microsoft's not even, I wouldn't classify Microsoft as a SaaS company. To me, there's so much more than software as a service, but they are one of the biggest components of IGV, which is, technically software. So they're getting sold off with it. Same thing with Palantir, 129.76. That's down about 4%. Tesla, $2 away from losing 400. $2 away from losing 400. Honestly, if they're going to dump Microsoft, they should just dump it to 350. Like, if they're going to dump it, rip off the Band-Aid. If you're going to take Palantir to 100, take it to 100. If you're going to take Salesforce to 125, take it. Like, just rip off the Band-Aid on SaaS. Get all these stocks hit. We know the market wants to hit them anyway. And then let's start our recovery. But it's just every day. That's another reason it feels familiar to 2022, but only in the SaaS sector, not in the broader market. The reason 2022 sucked is because every day you would go down. And then you would have like a week of going up and you would think, all right, enough is enough. And then you would go down the next week. And it's almost exactly what's happening with software. There's another 2 or 3% every other day, and then a recovery, and then down 7%. Then you recover 3%. You're still lower from where you were 2 weeks ago. So you feel like you're okay. You're going to make a recovery, and then you go right back down. And so ripping off the Band-Aid would be a lot easier, but it doesn't seem like the market's doing that yet. MicroStrategy down 1.5% as well. SanDisk looks unstoppable. Yeah, I mean, the memory names. Micron goes green. Again, the question to everyone in the chat as well, do you buy memory here? SanDisk up 5%. Like, do you have the stomach to buy these names, knowing the evidence in front of you is quite obvious that memory is not slowing down and that there probably is another 300-400 points in these names to go higher? Or, are you too scared to wake up one morning and see that there's an oversupply in memory and there's some headline and then boom, these stocks take a hit? It's a little tough. It's a little tough to easily just be like, yep, I'm going with the EPS projections and buying them at these levels. Now, then again, I think these stocks probably go higher. But do you have the stomach for it? Nvidia right there, still holding on to 193. Still holding on to 193. RAM is the bottleneck. Look ahead, it's a bottleneck in hyperscalers. I do not disagree. I 1,000% agree with you that memory, RAM, all of it's the bottleneck, and it is one could argue it's the most important commodity on the planet right now when it comes to this AI revolution. Having said that, does that mean that these stocks have higher to go just because that is true? Or is enough of that priced in? Now, you look to the price earnings multiple and say it's not priced in enough. That's fair. But if you look at Micron's chart over the past 20 years, you think it's not priced in, you think you're buying in, and you end up buying in at the top. Not saying these stocks are topping, but I think that is the fear for why their multiples continue to be discounted, even with their growth. People are just afraid that inevitably RAM does not become the bottleneck, even though it seems like for the next couple of years it is going to be. Tesla right there, 402.85. That one's still trying to hold just above 400. Lemonade, which got hit heavy last week, down another 7%. Is AI going to commoditize insurance? Like, I actually don't understand why Lemonade got hit. I mean, I understand it's a growth stock, and maybe that's enough of the explanation, but this one felt aggressive. 99 to 53 in like 3 weeks. It feels like there's something deeper there that the street got upset about. Rocket Lab trying to go low green right there, 71.12. Trying to get back above 70. SoFi, this stock, I think Anthony Noto has got to come to grips with the fact that he's not going to be getting that massive pay package. I mean, if this thing does not get to 35 soon, there's no way he's getting paid. Forget the 45 level. It's at 18. That's more than a double from here. Like, it's not happening. I would be very happy if SoFi gets to 35 in the next couple months, but unless we have a massive reversal in the month of March and April, which is possible, quite frankly, the February slump is setting us up for that. But we're talking about like Liberation Day type reversals from the lows. If SoFi were to double from here, just to match that, I can see SoFi getting to 25, maybe like 36 is like a lot just for Noto to get paid. And so if we don't have those types of reversals, then the pay package just might not happen. The VIX, is the VIX up? VIX has got to be spiking here a little bit. VIX is up 6%. The VIX is indeed up. Is indeed up. Ondas, is that green? Ondas, that's up 4%. So some of your drone stocks catching a bid. Red Cat right there, that's up 2% as well. Palantir again below 130. Tesla holding on like a champ to 400. We'll see if that breaks. Nvidia as well. I guess is your pre-earnings pump. Streets buying in before the numbers. That's almost at 193. IGV down 4%. Again, wow, Netflix down 4% as well. Hit 75.01 at one point. Zeta down 5, Hood down 3, AMD down 2. And now Crowd, it's getting worse. 7% down for CrowdStrike's 363, 709. Fear and Greed. Where are we at on Fear and Greed? I think we're probably closer to Fear. Yeah, we are at Fear. 42 on Fear. 42 on Fear for Fear and Greed. Silver's at 87. Gold's at almost 5,200 again. Gold and silver once again catching their bid as the market continues to, I guess, go to safety, which might be gold and silver. What's up with American Eagle? Is that pumping as well? No, wow. Why is American Eagle down 6%? Did Sydney Sweeney tweet something? American Eagle down 6%. I don't know why that stock's getting hit. Is all of retail getting hit? Target. Yeah, Target's down 2%. Lowe's is down almost 1.5%. All right, so the retail names, I guess, are getting sold off today as well. John Deere slightly green. How about Caterpillar? That one's also very slightly green. AI won't disrupt managed healthcare sector. That might be a place to look for value. Where is UNH? We haven't looked at that in a bit. UNH 289. So again, UNH fell from 350 a month ago. I think the lows was what, I hit 258 in February 6th. And it's slightly recovered since then, 289. The Lillies and the Novos of the world, Lilly's up 3% based on that Novo result, are a bit more susceptible to, Novo saying what they said today, which is that our drugs aren't as good as we thought they were, down 15%. But managed healthcare might not exactly have that same issue. Again, we talked about this last week. There was a fund manager that said the reason why we like John Deere is because they make physical things and that can't be disrupted or disintermediated by AI, which again, we're at the point of the cycle where fund managers are literally trying to figure out what stocks can't be disrupted by AI. And they're going into these companies that are barely growing to be able to make the argument that, hey, like at least AI is not going to kill them. And I think that's just an incredibly crazy narrative that you are so afraid of AI that you need to get into a company that makes like soda, for example, Coca-Cola, which is up another 0.5% today because AI can replicate Coke. Which again, like logically, it's not crazy, but it's also like the multiple you're paying just to get into something that can't be disrupted might not necessarily hold up if the disruption ends up not necessarily happening. Apple right there, 264 as well. Is there a data center headline? I don't see any data center headlines. We had a couple of articles come out over the weekend just saying data center spend continues to be massive, but I don't necessarily think Nebius and CoreWeave are moving off that. We actually had some bad headlines last week around, again, financing for these data centers and the credit markets. But you got Nebius right there at 98.75. Did you read the Citrini piece? Yes, we talked about it. I read it. I think it's a very valuable perspective. I don't know why he's getting so much hate on the article. And that's not good to see. Just because someone puts out a bear case on what could happen and people say, this is horrible to put this stuff out there. It's like, no, you need to have different perspectives on what could happen. I think it's very logical to say, hey, if AI gets so good, it could create massive unemployment and, we have to have a UBI. Like these are all logical things to think about. Now, maybe it doesn't happen, but I do think it's worth kind of pontificating about. Having said that, I have a more optimistic view on what happens with AI. It's just this SaaS sector, unfortunately, from the market's perspective, is not sharing the same type of optimism. Northland raises their Nebius target to 232. Nebius also got a 150 target last week. I think stock got to 108 last week before taking a hit on that CoreWeave headline. USAR, that went green, up 1.3%. Did you see the Cold Fusion YouTube video on OpenAI? Yes, and obviously it raises up a lot of questions on what's going on with OpenAI. But once again, if you believe their growth trajectory, which over the weekend, a bunch of articles stated that OpenAI is going to try to get to 280 billion in revenue by 2030. Their market cap is 850. I mean, they're trading at 3 times sales. If they actually get to 280 billion, call it 300 billion in revenue by 2030, like, yeah, OpenAI is cheap right now in the private markets. Now, can they get there? I don't know. But if they do, they're going to need a lot of compute, a lot more gigawatts of data centers, and ironically, the terminal takeaway from the Citrini article was buy Nvidia. I mean, basically, he was like, the only way to avoid or find any level of safety is you have to be long the things that are getting every marginal dollar of AI revenue, which ends up being Nvidia. Having said that, even if you make a lot of money off Nvidia, if the global economy is collapsing, it's not really going to matter. So it's a more broadly doomeristic perspective on the state of the economy. But to him, it's like Nvidia, CapEx, hyperscaler is the only safety in the midst of all this. Microsoft, are we going lower? 389. It got a bounce off 387. Maybe that's the end of the SaaS sell-off today, potentially. We'll see if it goes back to below 387. Germany, quote, European Parliament's plan to suspend ratification of the trade agreement with the U.S. could prompt the U.S. government to fundamentally reconsider or even terminate the already agreed to deal. Which I think is basically what Trump just tweeted about around if these deals actually will stay in place. I think there's going to be some countries like Japan that don't want to mess with Trump. And, Trump just endorsed the new Japanese prime minister. They have a really good relationship. Japan keeps buying our treasuries. Like, I don't think Japan would want to renege just because the Supreme Court went the opposite direction. But I think India will. I think South Korea will. I think the EU's definitely. China is not going to waste any time. Like, there's only going to be so many countries that kiss the ring. The rest of them are going to be like, dude, your ring lost on a 6-3 decision. And so we got to renegotiate. And so I do think that's going to be another narrative that the administration has to deal with. We have some macro data coming in. Let's pull this up, see what we're looking at. This data is for factory orders in December.
Exactly as expected. Down 0.7. That would be the weakest since OC of last year, and that follows up 2.7, yet unrevised. That was the best since May. So we went best since May to the weakest in October, and if we strip out transportation, it becomes a positive number, which gives us some clues as to where the weakness was. Up 0.4, better than expected, and that follows a slightly downgraded 0.2 that becomes 0.1. That 0.4, best since July of last year. Now we're going to go to December final reads on durable goods. These are mid-month numbers being changed. The minus 1.4 actually remains minus 1.4, weakest since October, and that's the tombstone for 2025. These are all the final reads, and if you strip out transportation, it improves 0.1. From up 0.9 mid-month to 1 full percent. 1 full percent would be the best read going all the way back to SEP of 24. Now, if we switch gears a bit here and we look at new orders, non-defense, ex-air, proxy for capital spending comes in a strong 0.8. Mid-month read was 0.6. That would equal where we were in November. To find a higher number, you're in the SEP of 25. Switch gears to shipments. Also a 0.1 improvement. Mid-month read, well, it was 0.9. It now becomes 1%. 1% will be the strongest read since SEP.
All right, so slight misses on factory orders. The rest of these are either beats or they came in line with expectations. I don't think this is enough to really move the market today. S&P, well, maybe that red candle is because of that miss on factory orders, 685.30. Or maybe it's because all the tech stocks just went red. Microsoft reversing. Hit 389, got rejected right there. Let's see if it loses 387. Let's see if Microsoft loses 387. If so, we've got lower to go on the SaaS names. Meta goes red. Google, just 30 cents away from going red, hit 319, now at 315. Amazon, unfortunately, continuing to get hit. I think the tariff news is technically good for Amazon if tariffs go down, given Amazon sells a lot of things that end up being tariffed. But that stock still down 2.4% as well. You know, it was funny over the weekend. My mom, who doesn't keep up that much with economic news, but she obviously saw what happened with the tariffs. She was like, so do we get a refund for like all the prices we were paying at grocery stores and Walmart? She was like, because I'm sure I probably paid higher prices because logically, like the tariffs increase prices. And I was like, no, we as the U.S. consumer are not going to get a refund. I don't even know if actual businesses are going to get a refund. But, you know, that's my mom. She's not that deep into caring about the stock market or the news of the day. I would imagine a lot. She's like an average American. I would imagine a lot of average Americans are going to be asking themselves that question of like, hey, so I paid extra prices for the past year and a half that were illegal, essentially, to pay. Do I get my refund? And the answer is going to be no, you're not getting a refund. And you're definitely not getting this tariff $2,000 dividend check either. Like, that's out of the question. I mean, I am curious on this State of the Union tomorrow, how Trump reframes the narrative. Because right now, the narrative just looks ugly, dude. It looks like we wasted a year getting into all these trade deals that have that literally aren't valid anymore. Trump is just like tweeting in all caps that, hey, don't do anything, otherwise something bad's going to happen. When in reality, these countries know like the leverage is gone. And now is the next year of his second term, which, by the way, most presidents after 2 years become a lame duck with or without winning the midterms. It's like it's really hard to get stuff done in the final 2 years. You have 2 years to do stuff. That's just how the U.S. presidential race works. Like, is this second year going to be spent again on tariffs? Small businesses will inevitably get burned more than anyone else. Well, I think there's going to be a lot of lawsuits from these small businesses to try to get some refunds. And again, the Supreme Court gave no guidance. SoFi continuing to get hit, down 18.22 right here. The Supreme Court said, we don't know how you're going to handle the prices and the refunds, but something needs to be done. And that also opens up just a lot more uncertainty about where things go from here. Salesforce down 4, Duolingo down 5. Microsoft, we need a reversal here. It's toying with 387. If we lose 387, we are going lower. We are going lower. Will that happen? GitLab, that stock is down 8% right here on the day. JP Morgan, that one's getting hit probably. Wow, JP down 3, almost below 300. Jamie Dimon is selling about $20 million of stock. But he hasn't sold in 20 years, so it's not that crazy that he's selling. The number of home buyers has fallen to the lowest level on record. America has 44% more home sellers than buyers, as per Redfin. Yeah, the broader housing market is not necessarily in the best situation. S&P down to its lowest level of the day, or very close to its lowest level, 685.20. Some of these growth stocks that are holding green, if we get another 0.2% down in the S&P, they're probably going to flip red. It's just hard for them to hold green in the midst of this red. XLE continues to catch a bid. That's up 1%. Hood, once again, getting hit, 72.66. That's also down 5%. David says, you were saying that Trump lost all of his leverage, but that's not true. The court said he can't tariff based on IEEPA. They did not rule all the other ways he can do it. Okay, so that's a fair point, and I'm happy you brought that up. Yes, the court did not say that every other section of previous trade acts are invalid to be able to institute tariffs. However, let's be super logical about this. Why didn't the administration use all those other previous justifications to implement reciprocal tariffs back in April of last year? I mean, logically, they went through IEEPA because IEEPA had the least barriers to be able to legally justify the tariff. Remember, a tariff is a tax. In this country, in the United States, when you institute a tax, you better have a hell of a justification for it. You know, that's sort of the ethos of
the United States, right? We fought the British to get out of unfair taxes. So like, you can't just institute a tax. The reason they went through IEEPA is because it was the easiest way to do it without having pushback. That was just ruled illegal. So now all the other sections they're using, they have issues. Some of them only go up to 15%. He was tariffing South Korea 25%. Now he can't do that. Some of them only last for 150 days until you have another investigation to extend it. Like there's all these different nuances that the administration probably looked at in February of last year and was like, yeah, all this stuff is not going to get the job done as quick as we want it to do, but IEEPA gives us the authority. And it would have worked if the Supreme Court didn't strike it down. So yes, he has other ways to increase potential forms of leverage on tariffs. The problem is, I mean, those other ways just might not be as effective as IEEPA. And I think that's going to be the broader question long-term. If he wants tariffs, he has to go through Congress. Yeah, and that's what Gorsuch said. Gorsuch literally was like, hey, if you want tariffs, do it democratically. If not, then too bad. And I get why Trump didn't go through Congress, because who the hell was going to vote for it? I mean, you need 20 Democrats, or at least I think it was 14 Democrats to be on your side. The Democrats weren't going to give him a big win in his first year. They're definitely not going to give him a win in the midterm year. So from Trump's perspective, I get it. He had no route other than to do it through IEEPA. It just didn't end up getting deemed legal in the courts. Amazon down 2.6, Meta down 1%, S&P still holding 685, but that's red. Nvidia right there, losing 193. You're back at 191, 191.60. I don't get why SoFi is getting hit this bad, dude. This is getting ridiculous on SoFi. Like, it's actually getting stupid. 1813. My goodness. I know all of fintech's getting hit, but it's like SoFi at 25 was a fantasy. Like, it should have never been there, I guess. That's how the market's pricing it in. Iran, that one's getting hit still. No, Iran's actually going green. That's up 2.5. Some of the data center plays are holding up. Nebius at 99. This is going to get quite interesting. Nvidia 191.31. That continues to lose some of its steam. Let's get some more coverage on what's happening with Trump and this tariff stuff as well.
Means for tariff rates and the economy and jobs and inflation. How much of a game changer is it? Well, first of all, President Trump, as we heard from Secretary Besson over the weekend on some of the shows, and the trade ambassador, Jamieson Greer, remains defiant in his use of tariffs. He says this morning at 7 a.m. on Truth Social, the Supreme Court will be using lowercase letters for a while based on complete lack of respect of the United States, accidentally and unwittingly gave me as president of the United States far more powers and strength than I had prior to their ridiculous, dumb, and very internationally divisive ruling. The court has also approved other tariffs, he says, for example, of which there are many, and they can all be used in a much more powerful and obnoxious way with legal certainty than the tariffs initially used. We did get a taste of that as the president immediately moved to implement 10% and then 15% over the weekend tariffs using the 122 clause. So how do we calculate what all this means? Well, good thing we have the Yale Budget Lab because they do some real-time work here on this. So basically before the IEEPA ruling, the Supreme Court ruling was shot down, the effective tariff rate, kind of looking at everything, was about 16% here. Now, with the substitution of the 122 15% tariffs, that's 13.7%. So it's comparable, a little bit less. Yeah. But what's interesting is that this one only lasts for 150 days. So unless he can get it extended, it would go down to about 9%, 9.1%, if he cannot, I don't know, get it codified in Congress or figure out other mechanisms using all sorts of investigations to get these more permanent. It does spell relief, right, for ultimately for corporations, consumers. Yale Budget also looked at the PCE impact, the inflationary impact. So before the Supreme Court ruling was struck down, 1.2%, they say, change in PCE levels this year. And now, with the substitution of the new tariffs, That's only 0.9%. So, we talked to Torsten Slok of Apollo, and he was saying this is good. It means less pressure on inflation. They put some numbers behind it.
Any idea, Sarah? Because you're a good Trump.
I mean, it is good because the average inflation rate, as you can see, just went down from 16 to 13, but which is technically good for inflation. But how long is that going to last as well? Given they're using a section that only allows them 150 days for this. Microsoft, here it is, 387. We have touched it again. It either bounces here or we're losing it. And if we're losing 387, then we are going lower for the day. 387.89. VIX is still spiking here. VIX is now up 9% today. I'm surprised Nvidia is still green. I really am surprised Nvidia is still green today. TSM also green. That's probably a proxy for Nvidia earnings now. S&P low of the day, 684.50, down almost 0.7. This is basically where it was last night during the futures. The 10-year yield is down, which is good. Now, maybe people are selling their stocks to buy bonds, which is not good for investors, but for the health of our borrowing costs, it is good to see that 10-year finally get some relief. But certain stocks are still being bought up, like a SanDisk. Fear and Greed's at 39. SoFi, it's about to lose 18 if this keeps going. 1807, down 5% here. Again, just ugly. But you're still seeing pain. Bond investors are still investors of it. That is fair. People who buy bonds are still investing. I guess I should say stock market investors don't get the benefit of these potential yields going down, at least in the short term. Wow, is Bill Ackman interviewing Vlad right now? I got a notification from Robinhood. Here, Bill Ackman talked to CEO Vlad Tenev. They are really pumping this ventures fund, dude. They are really pumping this ventures. They did a video with what's his name, Brad Gerstner, on their YouTube channel. I guess they're gonna do one with Bill Ackman now. Huh. I guess that'll happen later. Again, my take on the Robinhood Ventures Fund is I'm not buying it, and I don't like the valuation of the companies that are in the fund. I just don't. So I'm all for democratizing access to retail and private investments, yada, yada. But I don't like the valuations. And I think retail is being more so pitched as exit liquidity than anything. And that's not just Robinhood. That goes for every IPO that's happening this year. I do not like the valuations. It just feels too obvious that these companies are looking to get out and to get into the public markets. And so I think it's good that Robinhood's doing it. They're probably going to make a lot of money on it. They should be growing it over the long term. This is the time. I mean, if you don't do it now, when are you going to do it, right? You got to get people to be excited for it. Having said that, I don't think some of those names, the litmus test is if those companies were public, would Databricks actually be holding a $134 billion valuation? If CrowdStrike's down $30 today because of one tweet from Anthropic, do we think some of those stocks that are in any of these venture funds, even Figure or Aptronic, major robotics companies, would they be able to hold up in the public market? Like, no, the answer is no. They would get wrecked. And so I don't know if that means that they're the best private investments either. Like Stripe is not worth $140 billion in these public markets. There's no way. Not with SoFi, PayPal, Affirm, and Block getting hit 5% every week. There's no way Stripe holds up, no matter how much they're growing. Once you get put into that bucket of algos that the fintechs are trading on, your stock's going up or down, and it's not really something you can do about it. Oracle is down 2% as well. So, yeah, I just don't think the private investments make that much sense right here. BM&R is down 3.5%. Grab's down 2%. Elf's down 3%. AppLovin's down 8%. Goodness gracious. Doug says Anduril's overhyped and I'm a holder. Don't buy it. The sentiment doesn't match the actual business. I agree. I mean, Anduril's now getting ready to raise at $60 billion. That was the rumor last Friday. Which, look, amazing company, and they probably deserve a premium, but we know they're not profitable.
And we know that when they do go public, they're not going to have margins that are anything close to interesting because they're a hardware company. Like, they use software, but they're not selling software. Those companies don't have the best margins. So for those that want to pay $100 billion for Anduril in the private market, it's like, just think it's a bit aggressive. Google right there, 316. Meta at 348. Webull, how about that one? Webull is down 2.5%, below $6. Again, why is Microsoft down? I believe Microsoft is down more so on this SaaS sell-off than anything else. I don't see any specific headline for Microsoft. It keeps holding on 387. There's your bounce from 387 to 388.90. It looks like 387 is enough of the floor today. And that's holding up Salesforce and Adobe and IGV. Salesforce 176. When does the AI killing everything narrative end? It's a good question. And quite frankly, I mean, how many people going into 2026, put in the chat, did you genuinely think there was going to be an AI kills XYZ narrative that would have $1 trillion implication for the stock market, in this case, in SaaS? I didn't see that coming. I really did not see Anthropic putting out a couple of tweets and the market saying we've got to sell Salesforce, Adobe, and Microsoft because of how scared we are of their legacy businesses. And if you did, obviously, you could have shorted SaaS and made a killing, but I just don't think a lot of people saw that. Okay, for the people saying yes, did you actually trade on that? Or like, I really don't think a lot of people thought Adobe would go to 2022 prices because of Anthropic. Yeah, it obviously makes sense in hindsight, but for those saying yes, I hope you freaking took a trade on it because, I mean, IGV is down a lot this year. Any software name is down a lot this year. That's the trade of the year so far. Short SaaS, if you timed it. And so my point is just that you know, when does that come to an end? I don't know, because I didn't expect it to ever come into fruition. The scariest thing about the SaaS sell-off is that AI is going to get better and better and better. So if the market has deemed that all these SaaS companies are dead because of AI, and AI is only getting better and better and better, the SaaS companies should keep going lower, lower, and lower. The only way to counteract that narrative is for the Adobes and the CrowdStrikes of the world on those earnings to be like, you were wrong, and look at our numbers. Now, I don't think any of these software companies actually can do that. The only one I think realistically has a shot to be like, shut the hell up, look at these numbers, read them and weep, is Palantir. And Palantir already has, you know, a premium, right? Palantir trades at a premium. These other software, like Salesforce, is going to have like 8% growth. They're not going to be able to kind of puff their chest out and be like, look at our numbers. They'll be like, all right, it's 8%, cool. Like, you're the leader of this whole agent force AI revolution. You're barely growing 10%. And that's the scary part about SaaS, is like, if they can't put up the growth, which these companies are just legacy old companies, they're not going to be able to, unless Adobe says, hey, we're doing 25% growth. Adobe does that, they're up 30% the next day, because they've been doing 8% for the past like 5 years. Now, Adobe is super undervalued, but their top line growth is not screaming AI leader. And I think that's what the street is upset about when they look at Anthropic doing 10x growth year over year. Rubrik does grow over 30%. That is fair. So Zeta grows at 34%. So there are some of those software names that I think should be able to put up the growth to, change the narrative. But Palantir is doing 70%, right? Like, I'm talking about names that are actually going to the market and saying, you are absolutely wrong. Look at our growth. Look at OpenAI's growth, and then compare kind of how our software enterprise business is growing with it. Now, if Zeta comes out and says we're guiding for 45% growth, that would be, I think that's something where the market has to pay attention to. Or Rubrik. But if these companies can't really put up those numbers, I don't think they're dead, because 30% growth, 25% growth, even 10% growth for Salesforce is still pretty good. But the narrative on their stock might continue to get hit. That's the issue. Like Duolingo, which is, I think, growing at 45% roundabout, or 43%. Like, do they have to accelerate to 80% to prove to the street that they're not a joke? Because the entire narrative on their stock is that like AI language learning is obviously going to be commoditized. What type of growth do they have to show? By the way, their MAUs went down last quarter, which is also not a good thing to see. for the street to be on their side. What about Reddit? Reddit today, are we green? Reddit is red by about 2%. Reddit's not necessarily SaaS, but it's treated as SaaS. Same thing with AppLovin. I mean, technically they are SaaS companies, but they're not like enterprise software in the same way that ServiceNow is. But Reddit's and Reddit's growing too. It's just, once again, the street's wondering, hey, you know, advertising is your business. What happens when GPT has the best ads on the planet because of conversational AI? You know, where does that ad spend go when it comes to Reddit? SoFi, 5 cents away from losing 18. 5 cents away from losing 18. Did you talk about OpenAI Frontier? Yeah, we talked about that in the morning. That's old news. It was a month ago, but they are obviously starting to build FDEs that wants to compete with Palantir in the enterprise space. And, you know, they recognize that the enterprise is a different challenge, but that's where all the value is as well. Cantor Fitzgerald reaffirmed their overweight rating on Nvidia, $400. Wow. Did Howard Lutnick give Cantor Fitzgerald a call and say, give us the highest price target on Nvidia on the street? Because he knows that Nvidia controls the stock market right now. Is that what Lutnick did? 400, goodness, on Nvidia. Highlights suggest surging compute demand, Blackwell-driven scale rack supercycle, expanding AI adoption. Nvidia sold out for the next 2 years. Despite concerns over hyperscale CapEx competition, the firm sees Nvidia shares poised for a major inflection with a $400 price target. I mean, I wouldn't complain if Nvidia gets to 400, but I don't think that easily happens this year. Trump is live. I don't know what he's talking about. I'm going to it right now. Again, I have no idea exactly what he's talking about, but let's pull this up.
Throughout this hall, I am joined by heartbroken Americans who have lost parents, siblings, children, grandchildren, and treasured loved ones to the scourge of illegal immigration led in by the past administration. Millions and millions of people from jails, millions and millions of countries that we don't want to know about. Drug dealers, murderers, 11,888 murderers were allowed into our country by the Biden administration. These are the...
Okay, this is an Angel Families event. It refers to U.S. families who have lost loved ones to violent crimes committed by individuals in the country illegally. So he is talking to family members of people that have lost loved ones due to illegal crimes from illegal immigrants. We'll see if we can get some clips from this as it wraps up, and we'll see if he mentions anything about tariffs, the market, etc. But that's what he's talking about. Microsoft 388. Once again, it looks like she wants to just lose 387. SoFi loses 18. Oh my goodness. Dude, you would think around 1850 that was like getting close to the bottom. Nope. Right below. AMD down 1%, Oracle down 4%, Zeta down 6%, Bitcoin 65.7. Unfortunately, these stocks have fallen so low that even a good earnings, even if they pump 20%, is going to barely recover any of the dent that they've lost over the past 4 weeks in a variety of sectors, whether it's fintech or SaaS. You know, but the only thing is, I feel like Nvidia is the last shoe to drop, right? It's just hard for Nvidia to drop if, once again, everything's being commoditized by AI. Okay, that means you buy Nvidia. Number two, Nvidia is trading at a reasonable multiple. There's nothing unreasonable about their forward multiple. And then number three, the S&P is actually holding on relatively strong for the year, led by financials, healthcare, utilities, defensives, not tech. But there are winners and losers in tech. And one of the winners this year, in terms of just like not losing a significant amount of its market cap, is Nvidia, basically being flat this year. So either after those Nvidia earnings, Nvidia falls with the rest of the market and we're in a full-on correction, or these growth stocks, fintech stocks, SaaS stocks continue to get hit, but Nvidia and the S&P stay relatively stable. Feels like it's one or the other. Either we're really going down or we're staying flat. That V-shaped recovery move, maybe that's also in the cards. Sprout Farmers up 4.3%, but I think you would need macro sentiment to clear up. Google at 315, Amazon down at its lowest level of the day. French Trade Ministry official says U.S. was told in G7 trade rep meetings that Europe must be treated fairly and companies need visibility. I forgot Macron. He, had to deal with a lot of negotiating from Trump's side that had a lot more leverage. Trump was, I remember 2 weeks ago, bragging about how much he was threatening Macron with more tariffs on luxury goods. I mean, the French government might make a call and say, hey, we got to renegotiate on this stuff. Rubrik down 5.5% now as well. Amex is down 7%. Is it actually American Express? 7%? Oh my. Yeah, this SoFi has no chance on a day where Amex is getting. Why is Amex getting hit? Did Anthropic create a new global financial system? We're talking about American Express, dude. We're talking about trillions of dollars of money that flows to them every month. Why the hell is this thing down? Because of Blue Owl? Does Amex even deal with Blue Owl that aggressively? I mean, I know they have some partnerships with them. It's worse for Apollo, KKR, and Ares Management more than Amex. Here's a chart on Blue Owl's money management declines around private credit redemptions. Visa's also down 3%. All right, what's going on? What did Anthropic say? Anthropic came out with an AI credit card, right? That has to be the argument. There's no way Visa and Amex are down 3% and 7%. MasterCard's down 4%. Where is the AI credit card? What's happening here? It's because of the Citrini paper. Dude, I don't think the Citrini paper is actually what's causing these stocks to sell off. I get that in the Citrini paper, he was super bearish on financials because a lot of it's tied to delinquency rates and mortgages. And when people lose their jobs, they can't pay back their loans. I get it. That would hurt Visa, MasterCard, and Amex. But do we really think the algos are reading the Citrini paper and selling off everything that the paper said was bearish in 2 years? For those that don't know what I'm talking about a popular Substack that put out an article that went super viral over the weekend. And it just painted a doomeristic bear case if AI became too good in a couple of years. Now, I get the article went viral, but do we really think the market's selling off stuff because of the article? Because that would be a bit crazy. Dallas Fed Texas Manufacturing Output Index is 12.5 in February versus 11.2 in January. Okay, so that's a beat month over month. No, but why are the fintechs selling off? Like, what the hell's going on? Cactus, if you have a headline on this, let me know. But I don't see anything on my side. Domino's CEO says same-store sales will grow by 3%. Are we still holding DPZ? It was up 5, down a little bit. I don't know. This is weird. This is a little weird. Claude's launching credit cards. Dude, that has to be the argument, right? Claude getting into the credit card. I mean, could there be an AI credit card? Is there some way for us to implement AI within, not credit underwriting, because that would hurt like Upstart and those companies, but more so like a legit. Wait, is this the headline? Is this fake or is this real? Oh yeah, dude. Yeah, Cactus. I saw this right when you sent it to me as well. Okay, so this is the headline. I think it's fake though. There's no official source. Claude Code launches credit cards and payment processing. I think it's fake though. We need an actual source on that. I see multiple people tweeting it. I don't see a source. but if the algos took that headline as real, then yeah, immediately Visa, MasterCard, and American Express would go down. Microsoft still holding 387. Salesforce has lost 175, folks, down 6% on the day. Again, I don't think that headline is real. I'm trying to see if like Reuters reported it or something. That's crazy, dude. That's freaking crazy. Claude launches market open. Bro, everyone is going to get hit. Everyone is going to get hit. Literally, no one is safe. No one. No one is safe. JP Morgan down 4%. It's all financials. Okay, but Visa and MasterCard don't fall like that. And the banks have been up and down for the past couple of weeks, but the payment processors have been not stable, but they haven't had negative 7% days. So yeah, you can look at the heat map right there. Financials are all getting wrecked. Maybe they're just casualties in the carnage today. Maybe that's enough to explain it. But you don't have American Express go down 7% every day. VIX is at 25, folks. We are seeing a massive VIX spike right here on the day. Sorry, 21, but VIX is up 10%. If we get to 25, it would be a lot uglier. But 10% up on the VIX officially. PayPal's down 2. Regional banks are down 4%. All right, so something around financials have completely gone the opposite direction here. It's regionals, it's big banks, it's payment processors, it's fintechs. SaaS and fintech just wrecked. SaaS and fintech completely wrecked. Claude launches alternative to New York Stock Exchange. Oh my gosh. S&P just went negative for the year. That is correct. S&P just went negative for the year. Jack, thanks for the super chat. And Nick Stocks, thank you for becoming a channel member as well. Taylor, thanks for the super chat. TLT is up. Deflation is coming. I don't disagree with that. I don't think we are going to have an inflationary environment if we keep seeing this type of a sell-off. And maybe TLT is the play. TLT was rumored to be the play last year. Didn't end up working out because we didn't end up cutting rates that aggressively. Maybe that's what happens this year. SoFi still below 18. TSM slightly green. Nvidia losing the majority of its pump today, but at least holding on to 191. Claude launches new obesity pills. Dude, Anthropic's just going to become a $50 trillion company, and we're all just going to have to be at the behest of Claude. That's it. That's our future. Anthropic controls the world. Claude to launch presidential candidate. Oh my gosh. Where's the Dow? Are we at 50K? Dow's down 600 points. A little bit lower than that beloved 50 racks that we were at a while ago. Bitcoin continues to get hit. Netflix still getting hit. Yeah, NASDAQ still getting hit. Adobe down 5. Goodness gracious, dude. Well, I think the broader question here is, are you calling BS on this software dip? And we know that retail's been buying a ton of IGVs, so retail has been buying the dip on this thing. It's days like today that continue to scare people around software. CrowdStrike down 9%, dude. My goodness. Now, see, the problem with cybersecurity, Steve and I were going through the numbers a couple of days ago. CrowdStrike's never been cheap. Like, their forward multiple is still ugly. Like, you can't go out a couple of years and be like, oh, that's reasonable. It's like, no, that's still pretty expensive. So the problem with CrowdStrike is, like, it always trades at an aggressive multiple. But what if that multiple actually does get a re-rating? And what if, like, taking advantage of the dip, given the stock does trade at an ingrown premium, mean that the dip isn't that dippy and it gets worse? Same thing with Palo Alto. If you go out a couple of years, their forward multiple is not that attractive. That's why when you look at Nvidia trading at 24 times, it's like, okay, this is reasonable. CrowdStrike's at like 50 times. Like, okay, hold on. Am I going to pay that much just for another 2 years of growth? I don't know. I don't think that means you short the cybersecurity names, but it doesn't necessarily mean they get cheap just because they fall down. Shopify also 7% on Shopify. I mean, there are none of these SaaS names that feel safer than others. What's happening with SYNX? I have no idea. This stock is a penny stock, though. $6 million. You know, part of the reason these stocks are getting bids is because people are so tired of being stuck in the big names that keep going red on them, that they're going to smaller and smaller names to try to find some alpha, even if it's just for a trade, which is fair. But, you know, those names carry a lot more risks with them as well. Uber, are we dumping on Uber? Uber, wow, Uber down for. Uber is not a SaaS company, right? I know they have SaaS types of margins, but like last time I checked, people have to like get into a car and go somewhere. Uber down 4%. OpenAI is investigating elevated error rate for ChatGPT conversations for business and enterprise customers. Okay, so OpenAI making some arguments around their enterprise conversations having issues. Zeta's down 6%. Uber was also in the Citrini paper. Well, see, the funny thing about the Citrini paper is that, I'll pull it up right here. If you assume the S&P goes down 40% and the economy gets hit, like every consumer stock gets decimated, right? Yeah, so there it is on Uber. So this is their prediction. Coding agents have collapsed the barrier for entry for launching a delivery app. A competent developer could deploy a functional competitor in weeks, and dozens did, enticing drivers away from DoorDash and Uber Eats by passing 95% of the delivery fee through the driver. Wow. The DoorDash moat was literally, you're hungry, you're lazy, this is the app on your home screen. An agent doesn't have a home screen. It checks DoorDash, Uber Eats, the restaurant's own site, and 20 new vibe-coded alternatives so it can pick the lowest fee and fastest delivery time. I mean, again, you might think this is BS, but this is how the market's thinking of some of these names. The most serious part of the Citrini paper that I actually thought was legit, like I actually thought, okay, this might be an argument, is what they said about India. Here's what they said. India was the inverse. The country's IT services sector exported over $200 billion annually, the single largest contributor to India's current account surplus and the offset that financed its persistent goods trade deficit. The entire model was built on one value proposition. Indian developers cost a fraction of their American counterparts, but the marginal cost of an AI coding agent had collapsed to essentially the cost of electricity. And it makes the argument that by 2028, the IMF is going to get into conversations with New Delhi to lend them money to deal with the massive increase of poverty that happens as a result of the IT sector getting destroyed. That I actually think could happen. That's very logical. Like, part of the reason people outsource developers in India versus the United States is because in the United States, it might cost like $150 an hour. In India, it costs like $20 an hour to get relatively the same type of work. An AI agent, I mean, you pay like $200 a month and it codes anything you want in an unlimited manner. Like, I think that would absolutely decimate outsourced IT services. Maybe we're not there yet. But if Claude Code is as good as people say it is, if Codex is as good as people say it is, then, I mean, how does that not happen? And if I'm Modi, I mean, I think that's one of the biggest things I'm thinking about right now, if I'm at all educated on AI, which is that is absolutely a direct threat. Just like call centers in the Philippines, like those are all being automated away. And those are massive jobs in Southeast Asia. So that part I absolutely do agree. The Citrini paper had a good point on. Now, vibe coding Uber Eats and DoorDash. I don't know. DoorDash down 6%. Okay. I'm starting to believe the Citrini paper was read by a lot of fund managers over. I'm starting to believe that's happening. I mean, really, DoorDash down, like, it just had a decent earnings. The stock was almost at 190. Like, did this article really trigger this? Salesforce down 5.5. Microsoft still barely holding above 387. Services PCE was also strong. Yeah, that's also fair. I mean, PCE was not good last week. Intel getting a little bit of a pump right here, 44. DoorDash had record growth in customers. It's insane. Yeah, it's just like if the market's forward looking and they think there's a vibe coded alternative to DoorDash that's agentic, that's not going to have to use DoorDash's proprietary fee system, then boom, I guess you price that in. It's just kind of crazy if you're going to price that in to that extent. We have some Trump clips right now. Let's see what he's saying.
If that election, if it wasn't rigged, it was a rigged election by millions and millions of votes. A guy that never left his basement. It was all run by crooked people. COVID was a little bit of a shield. We had a lot of things going on, but it was rigged by millions of votes. We did great in that election. If that election wasn't rigged, every single one of the people in this room right now would not be here. You'd be home with your son, daughter, family.
Okay, so Trump right there talking about a rigged election. The other clip is about his polls.
Tom Holman, Kristi Noem, our people have been incredible, the job they've done. And they take nothing but abuse, but you know, they're sort of pretty hardened to that, I think, because they know they're doing the right thing. It just amazes me that there's not more support out there. It's just, we actually have a silent support. I think it's silent. I think it's well, that's how I won. I got probably 85 million votes. They say 78 million, 79 million. They cheated in this election too. It was just too big to rig.
Wow. Sorry for the audio, guys. The audio is not the best there, but that's kind of crazy. Trump is saying they cheated in this election too. I probably got even more votes than what the official tally said. And this is the first time you're seeing Trump publicly show his anger around the lack of support. He literally said, I'm surprised there's not more support out there. I think the support is silent, going back to his 2016 campaign of the silent majority, right? Being his kind of core argument for, which he was right about, because in 2016 he ended up winning. There was a silent majority. But you can tell he's a bit annoyed. You can tell he is a bit annoyed. And he's voicing that frustration right there about not having as much support. S&P lows of the day, 683.65. Down 0.5%. Adobe still down 5. Duolingo still down 5. Microsoft, I feel like, is just waiting to lose 387, but it's holding on by a thread. Palantir still down 4. As that continues to get hit. Uber still down 4. DoorDash still down 6 as well. Why is AppLovin down 9%? Well, software. VIX almost 21. Yeah, the VIX continues to spike right here. This Bill Ackman Vlad thing. Oh, it is there. Okay, great. Well, why is Bill Ackman doing this? That's my question. I'm seeing it right here on the screen. They did like a Zoom interview. It's on the Robinhood app right now. I guess Bill Ackman has a stake in some of these companies. That's the only reason they're doing this entire conversation. Nvidia right there, 191.39. PayPal, $40.70. How about Iran? Iran's up 3%. At least some of the neo clouds are holding up. Goodness, man. This is like, we got another Trump clip. The audio might not be the best here, but Trump here is saying he suffers for the country.
Wouldn't be here right now. I'm just thinking as we're going through, because we've suffered through it together. I suffer for the country. I mean, it's the people I've gotten to know, the mothers and fathers, mostly mothers and fathers, husbands in some cases, wives in some cases, but mostly mothers and fathers, what they have to go through. But we wouldn't be here right now. I'm just thinking as we're going through, because we've suffered through it together. I suffer.
All right. I'm trying to see if he mentions anything about tariffs in these clips. For now, it's a lot of him talking more deeply about, I guess, about his presidency more than anything is what he's bringing up here. But we don't have any of the other economic arguments. I don't think he might not be making any today. Zeta right there still down 6. Shopify down 7. As that one continues to get hit. LAC, Lithium Americas, that's up a little bit. This one got hit pretty heavy. This one went up pretty heavy back in October. A lot of the rare earth names continued to get pummeled even after they've gotten a ton of media coverage, and literally the United States invested a bunch of money into them as well. Is it a good time to buy SaaS? I really think the question is subjective. I mean, I think if you were going to buy SaaS, like if you don't nibble here, I don't know when you're going to nibble. But if you have like, $10,000 and you want to buy the SaaS dip, I feel like this is where you have to deploy 20% of that, $2,000 of it. You don't put all 10K in, but the stocks are down 30 to 45% year to date. If you believe it's all BS, then at some point you buy this. The problem is, what if it's not all BS? I mean, now you get to the qualitative assessment of, hey, forget the revenues and free cash flows of these software companies. Those are going to be good. But realistically, does the market think that a DoorDash alternative or a Shopify alternative will become real in 5 years? And if it is, the stocks are just going to always be discounted. And that's the beautiful thing about the markets, right? They're so forward looking that you could be unprofitable for 3 years, but if the market sees profitability in the 5th year and they see growth rates, they'll give you the premium today, even if you're not making a penny of profit. You could be super profitable today, but if the market sees your business kind of fading out in 5 years, you get discounted today. S&P new low of the day, 682.90. 682.90. Did Microsoft lose 387? There she goes. Microsoft loses 387. It took her an hour and a half. But there it is, 386.50. The sellers not getting exhausted yet. And we might see a little bit more pain in software. App loving lows of the day. Microsoft is now creating a lot of lows of the day with the other software names. CrowdStrike, low of the day. Salesforce, very close to low of the day. Spy, low of the day. Reddit, low of the day. Duolingo, very close to low of the day. Rubrik, basically low of the day. Microsoft's forward multiple now, I think it's just under 22. Let's pull it up. Microsoft earnings forward multiple is 21.07. 21.07. Trump quote, fake polls. I got one today. I saw one today that I'm at 40%. I'm not at 40%. I'm at much higher than that. I love to run against anybody. The real polls say you'd kill everybody. It wouldn't even be close. Again, I mean, this entire speech looks like he's focused more about his presidency. And he's probably annoyed that his landmark policy got struck down, which is forcing him to continue talking about his presidency. Microsoft is investigating an issue in which users in the US may be experiencing a 504 gateway timeout error when trying to access services that require authentication. I don't think that's why Microsoft's down today. I think it's more the SaaS sell-off, but that's definitely not the best headline for Microsoft either. The two narratives in the market are hilariously contradictory. AI will simultaneously disrupt the market and it's useless to spend on. Which is it? Yeah, I agree. That paradox has been quite confusing. And the beneficiary of that paradox either way should be Nvidia. But it's weird. The market, the market's like, we don't believe in AI, but we believe in AI so much that we don't believe in anything else. And it's just a weird environment to be in. It definitely signals to me, I think the market is definitely tired of the AI trade, which is not a justification for these stocks being down so much, but it might be, from a sentiment perspective, something that we have to deal with until things turn around. SoFi must be getting wrecked. SoFi 1780. You've got to imagine Noto's pissed off about this after delivering one of the best quarters in history. Stock just can't get a multiple here. It's just not getting a multiple. Do we have the Flexport guy on? Yeah, we do. Okay, this guy runs one of the largest shipping companies and logistics companies. Here's what he has to say about the tariffs. Let's see his take on what's going on here.
Last week, but there's plenty of uncertainty in how and when they will get their money back. Our next guest, supply chain firm, created a tariff refund calculator for these companies. I remember mentioning it during our breaking news coverage last week. Joining us first on CNBC is Ryan Peterson, founder and CEO of Flexport. So Ryan, talk about what this calculator actually does and how much interest you've seen.
Yeah, hi there. Yeah, so Flexport, we're a licensed customs brokerage built around technology. So that's the first thing we've been doing for the last few weeks. Really, actually been building this for over a month, just in case this day happened, was have this calculator that lets you upload your customs data, which you can get from the government. They'll give it to you. You just have to sign up at customs portal, give it to us, and then we'll show you exactly how much money you would be owed if there were to be refunds, which I have reasonable conviction there will be refunds. And on Friday, we had 22 Fortune 500 companies sign up for this service. So I think you're going to see a lot of demand. I mean, it's over $100 billion worth of refunds that people are potentially owed. Let's see how the process plays out.
And it just spits out a number for those companies that sign up and tells them what they're owed?
Yeah, it just instantly just tells you exactly how much you'd be owed. And it's not that hard to do because we have all the data. We can see exactly which line items would be refunded, et cetera. So we've been building technology in this area for a decade.
What kind of numbers are you looking at for a small business, for instance, versus a large business?
Well, you're going to see up to, like I said, $100 billion is what's owed to American business as a whole. And yeah, any given company, I mean, we've got a mid-sized clothing company that I looked at last week, $70 million of refund. They're not like a big world famous brand or anything. So it's huge money. CFOs really care about this. Like, in fact, we're seeing as much interest from the CFO as from the trade compliance department.
What about navigating now the current tariff environment or what may be? I mean, I would assume it's hard to keep track of. You're not paying your IEEPA tariffs anymore, but you're going to have to still pay the 15%. I don't know. Tell me what you're seeing, Ryan.
Well, it's incredible. The president has a lot of levers to keep putting in new tariffs and change the environment. And that's the hard part, is keeping on top of this. Even that 15% that he introduced over the weekend actually hasn't hit the law yet. Technically, it's still 10%. We're waiting for, we don't respond to Truth Social posts in our tariff simulator calculation. We're waiting for officials. So just keeping on track of, like, based on what date it was, what duty was prevailing on that date. And for that, we have a tariff simulator. All these tools are, by the way, free. Just go to tariffs.flexport.com. You can use them. And so just stay on top of this. It's going to be even more complex. They are not happy. The administration is not happy to lose IEEPA, obviously. And they're going to start putting every other layer of tariff in. And it's going to be much harder to keep track of.
But we should note there's no procedure in place right now for businesses to claim refunds. The court just did not go there. And it in theory could be a long, prolonged legal fight that could take years, Ryan, right? Why are you confident?
It could take years. That's true. I'm pretty confident because in the court case itself, the government, the Department of Justice, filed a motion with the court that said if they lose the case, if the plaintiff prevails, there will be refunds. So to me, yes, it's going to go back to court, but I just read that document and think it's a slam dunk. So I don't know for sure. We don't know. On the other hand, you have the way that the customs law is structured is that you have 480 days from the date of a customs entry to file a protest. And if you don't file those protests by that deadline, and so April 2nd, add 480 days, you get to, I believe it's July 17th of this year, that you're going to have to start. If you don't file these protests, you will miss the window. And so that's why we want to start enrolling people now. Like, let us help you file these protests. Make sure that you don't, because if you don't file the protest, it's over. And the only way to get it back after that is a lawsuit, much more expensive. The protest we can just file for you. So that's a big part.
I mean, that's kind of crazy, right? You got the Flexport CEO basically saying, hey, there's a lot of people that are going to be ready to get their refunds, and there is no legislative validation or justification for why any 15% global tariff is still in place right now. And so I would imagine a lot of people are going to be trying to get their refunds, and the administration is going to be stuck in a ton of legal battles. And Trump knows this, which is why he's probably so annoyed that the Supreme Court decision went against him. Salesforce right there, 175. Is Microsoft still below 387? Wow, 385. Goodness, bro. We are continuing the sell-off here. Do you think Trump was told by Elon that AI will be deflationary? Then he imposed tariffs, which were inflationary, and tried to negotiate for a deal with trade partners? No. I think Trump ran on tariffs, and he was always going to go down the tariff route. I don't think Elon had anything to do with it. He just unfortunately did not have the correct legal execution as for the Supreme Court to justify his tariffs. I mean, again, we talked about this. Obama's 2012 ACA or 2010 ACA legislation almost got struck down in courts 2 years later in 2012 if it was not for a 5-4 decision. Sometimes this really comes down to 1 or 2 votes that makes the difference on an entire presidential legacy. I mean, if Obama didn't have ACA, there's not that many more signature pieces of legislation that he got done. The ACA was the biggest one. Trump in 2017, the only thing he got done was the tax cuts. Realistically, like, there was no other major legislation. I don't know what the next big piece of legislation will be for the second term, but the big beautiful bill, I guess, was like the major piece of legislation. But realistically, the tariffs were creating all the trade deals to create all the investment that was bolstering, what the administration did over the first year. And now that that's gone, you just got to ask yourself, what direction does the administration go? And I think a lot of this comes down to Trump's ego as well, trying to prove that he has the ability to implement this stuff. Microsoft's still at 385 down. BM&R, are we getting hit? BM&R is down 5%. ETH is 1895. BTC back down below 66. Robinhood's getting hit on this. MicroStrategy getting hit on this as well. MicroStrategy down 4%. And now you are seeing some more pain. Healthcare, kind of a form of safety today, but not really. Yeah, ETH has been going sideways. Palantir still down 5. Now, again, there are a lot of tax refunds coming over the next couple months, which are supposedly going to be good just for the economy in general. I guess we're going to have to measure those tax refunds in the context of increased potential new tariffs and see what that does to consumer demand. Let's get some more coverage right here on the EU's perspective on these tariffs.
Yeah, good morning to you, Carl. President Trump took to social media this morning to warn nations not to back off the trade deals that they agreed to last year, even though the legal authority for U.S. tariffs has been stripped away by that Supreme Court decision. The president wrote, any country that wants to, quote, play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years and even decades, will be met with a much higher tariff and worse than that which they just recently agreed to. Buyer beware. Now, that post coming after Europe warned over the weekend that trade deals with the United States could be at risk. Bernd Lang, a chair of the European Parliament's Committee on the International Trade, called it pure tariff chaos from the U.S. administration. And he wrote on social media, no one can make sense of it anymore, only open questions and growing uncertainty for the EU and other U.S. trading partners. Now, the EU Parliament postponed a vote that was scheduled for this week on the EU trade deal. The EU, remember, had been debating proposals that would codify that trade agreement with the U.S., and a vote was scheduled for Tuesday. That will now be put off. Now it's not clear when, if ever, that agreement will be finalized. A White House official told CNBC on Friday, though, that the U.S. expects all countries to uphold their end of the agreements with the U.S. despite that tariff uncertainty. Guys, back over to you.
Europe was slow walking this deal anyway. I mean, they were looking for sunset provisions. They were never sort of on board for this. I remember in Davos, we were talking to Secretary Lutnick about the uncertainty of whether Europe would ever pass this deal.
Yeah, and they after the Greenland issue came up when the president suggested that he wanted to take over Greenland, the Europeans canceled that vote initially or postponed that vote initially. So this has already been kicked. This can has already been kicked once. Now it's being kicked again. The idea that we're going to get to a finalized deal here seems maybe unlikely, but we'll wait and see.
Eamon, meantime, for a long time, we were hearing figures about tariff revenue in the $300 billion range. Over the weekend, Besson lowered that now to 130. He called the issue of refunds ultimate corporate welfare. Where do you think that leaves that discussion?
Yeah, I mean, I think it's real uncertainty for American companies. You guys were talking about it in the previous hour. This question of whether or not the administration will have to pay these refunds. It seems clear that if the Supreme Court has said that the duties were collected illegally and unconstitutionally, then that money has to go back to the people it was collected from. The only question is how long the administration is going to fight or be able to fight that in court, and then ultimately the disposition of the money. So eventually it seems, and again, not as a lawyer, but it seems that that money will have to go back to the companies that paid it. The question is timing and expense and how much friction there's going to be in that process.
And whether, as I referenced earlier, whether, politicians from different states or, Democrats who have been opposed to this will push for consumers to get refunds too, and how legally that could play out.
Yeah, I don't think that's in the law, right? I mean, if you collected a duty from somebody illegally, the duty's got to be returned to the person you collected it from. And then there's a political question of what is the appearance of that to the companies that may have raised prices in the interim if they pocket the spread, so to speak, on the difference between what they're collecting back from the government and what they paid, what they charge their consumers. Does that become sort of politically unpopular? Do companies feel like they need to do something to help consumers in the interim, some kind of bonus, rebates, something? They may come under pressure to do that. But clearly, if the government taxed people and did it illegally, the government's going to have to give that tax money back to the people they collected it from.
Okay, Eamon. Thank you very much. Eamon Javers.
Tesla, she's the next to fall, folks. S&P officially down 1.2. Tesla has lost 4 hundo. All right, last time this happened was 3 Thursdays ago, February 5th. And the next day we were up 2%. Tesla was at 420, had an immediate rebound. Today feels a bit different, given it's been 3 weeks and we are heading right back to some of those lows. Microsoft down 3, SoFi down 7, IGV down 5, CrowdStrike down 10. Nvidia, by the way, this was one of the only tech stocks green today, has officially gone red. I mean, it's up by 5 cents right now, holding it to be green. But now you are seeing a full-fledged sell-off as the S&P officially. I mean, look, 670 is the level we've been talking about for the past couple of weeks. We're at 680.9. We absolutely need to hold 670 for things not to get really scary. I don't think we're going to test that until Nvidia earnings, and Nvidia's got to be pretty bad for us to test it. But who knows? Maybe we sell off a day before the earnings. Again, for Nvidia, I don't think it's bad. Let's say Nvidia dumps all the way to 180. I don't think that's a bad setup going into earnings. Like, then if it pumps, it'll maybe only get to 190, but at least, it's the dump might not be as aggressive because it's already dumped before earnings. Having said that, if we do get that type of a dump before earnings, S&P is probably at 675 or lower, which would obviously be a bit ugly. Netflix down 4 as well. Yep. Netflix down 4. The VIX is flying. Again, if you're a long-term investor, I mean, these are prices that you kind of don't care about because in 5 years, it won't really matter that much. But in the short term, obviously, Zeta down 7, Shopify down 8.
It is ugly. VIX is up 15% on the day. Did Oracle lose 140? Oracle lost 140. 139. 139. AMD down 3. SPY still red. BMNR red. Microsoft down 3. Yeah, ASTS. At least that's up 2%. That's weird. That probably shouldn't be up right now. Novo's down 16, dude. Let's do a poll in the chat because I see a bunch of people asking this. Okay, so here's the question. Let's see what people think about this one. Trump is still live, by the way. Oh, wow. Michael Saylor just did a new podcast with that Natalie Brunel girl. It's a 2-hour podcast, dude. I'm sure he will have some words to say about Bitcoin. All right, here's the question. Is this a buy the dip? Is this a buy the dip? And not like 10 years from now you'll want to buy the dip, but more so like, hey, like, do you think a month from now Meta at 643 is going to look stupid? Obviously, 5 years from now, unless the Citrini article comes to reality, Meta at 643 should look stupid in 5 years. So it's not a question on is this a dip for the long term, but do you think this is enough pain or do we have to go lower than this? 681 on the S&P. If Iran strike happens, it's definitely not a buy the dip. I agree. Again, markets tend to overlook some of those geopolitical headlines, but the initial reaction is red. And then on top of that, just based on what we've been talking about for the past couple of days, this would not be a one and done strike. This might be a much more serious military event. That it might not just be a Maduro capture, then boom, we're done. Like we're talking about getting rid of Iran's nuclear facilities. That might take a little longer. Granted, if it is a one and done, then I think markets wouldn't react too badly to it. Tesla 398 right there, low of the day. But yeah, that could also cause a bit more pain. Is another Iraq? I don't think it is, but you've had a lot of people theorizing that if the administration is dead set on getting rid of these nuclear weapons, there's nothing else they can do other than put boots on the ground. And yeah, it would be another Iraq. Now, again, I really don't think that's going to happen, but if it does, that would not be the best. By the way, Pete Hegseth is meeting with Anthropic CEO tomorrow, Tuesday morning. A senior defense official told Axios, Anthropic knows this is not a get-to-know-you meeting. This is not a friendly meeting. This is a shit or get off the pot meeting, quote unquote. Wow, the Pentagon quote on Anthropic CEO, the problem with Dario is he's ideological. We know who we're dealing with. Damn. The Pentagon is not happy that Dario doesn't want his software being used in military tech. There's so many layers to this. First of all, why the hell would Dario let the Department of War use their model? Like, did he not think they were going to be doing shit like capturing Maduro with it? So I think on Dario's frame of thought, it's just kind of stupid. Like, how are you mad they're using your software? Like, why? Like it's Trump's government. You didn't think they were going to do some military shit with your stuff? So that's on his line of judgment. I thought that's weird. Number two, it goes to show how much the Department of War recognizes that Claude is the best model. Because realistically, they could have been like, oh, Dario doesn't want to work with us? Cool. We're going to take back our contract. We're going to give it to OpenAI. We're going to give it to Gemini. The fact that Pete Hegseth wants to meet with the guys, him acknowledging this is the best model, and there quite frankly isn't that much of an alternative. And so we're going to try to convince him to, ideologically change his opinion, which is not going to be that easy. It is putting Anthropic in a very strong suit. But, I mean, if anyone's seen Dario talk, I don't think they're going to convince him to say, let's use your models for military tech. Like, he's already so doomeristic about how far advanced the models can become. I don't think he wants his models on the battlefield. Which is why, I don't know why the hell he accepted a contract from the DOW 5 weeks ago anyway for $200 million. Like, what did you think was going to happen? But It looks like they will be having that meeting tomorrow. Nvidia just holding green. Netflix down 4. Tesla still down 3. S&P, the lowest of the day, folks. 680.60. The Dow Jones continues to get hit. We're down almost 2%, 800 points on the Dow. Zeta just fell below 15. Hood looks like she wants to go below 70. Hood 71.82. That's down 5. SoFi 1750. Bank of America is down 3%. American Express still down. CoreWeave somehow holding green today. I guess that's trading with Nvidia. American Express down 8% now. Forget 6%. We're down 8%. I don't know, guys. It's obviously ugly. You guys are split on is this a buy the dip? 52% say yes, 48% say no. Look, my answer to this is very simple, even though it's cliche. 5 years from now, I think SoFi at 17 is a really good deal. 5 months from now, I don't know. I genuinely don't know. And during Liberation Day last year, you know, when Hood was 29 and SoFi was 8 and Palantir was 60, I was pretty confident to say, and you know, I put my money where my mouth is. Nvidia and Hood were the two biggest things I was buying at the time. That this is going to be done with pretty soon. And it was. I mean, it took 4 weeks and then boom, we were basically on our way to all-time highs. I don't know if that's the same this time because you don't have this massive catalyst that caused the downside. You had a natural sell-off, which means the recovery might not be induced by catalyst. In fact, that recovery might take a lot longer because there was no catalyst to sell off in the first place. And so I don't know if like these prices in 5 months from now are going to look amazing. My gut tells me they will because February is a slop fest. And once we get through February and Nvidia crushes earnings, you'll have a little bit more momentum in March. And you know, we'll get closer to these rate cuts that are coming in May. But if the market's going crazy over a Citrini article, I mean, this market is so fragile. It's absolutely so fragile. VIX 22. VIX 22. High of the day. High of the day. Crypto is the catalyst. Yeah, but crypto, I mean, it's already taken a pretty ugly hit, right? Unless this is nothing. Unless, I mean, if BIC, I mean, all right, put in the chat. What do you think? Be reasonable here. Be reasonable. What do you think is your lowest target for Bitcoin this year? And don't just put 0. I know a bunch of you guys will to be funny, but like reasonably. My reason, I think 50. I think if it were to get another hit, it would be 50, and then that's it, and we're done. But maybe I'm too optimistic. Okay, most of you guys are with me. 45 to 50. That's what I'm seeing. 45, 45. A couple of you guys saying 30. Most people saying 40 to 50. 52, 57. Remember when it fell to 60, the spike up was in milliseconds. I mean, it's almost like it was just ready to get that bounce off 60, and then it was at 70. The next day, it was an $11,000 candle. Now it's back at 65, but I don't think it easily just drops to 30 like some people are saying. I still think there's too many buyers, not to mention the Clarity Act, that hopefully will be some level of support for this thing. So I don't know, but yeah, I mean, maybe if crypto falls, you know, I could take the S&P down with it, and obviously gold and silver could potentially continue to catch a bid. Is Basent live? No, Basent's not live. I was looking at something else. Is Trump still live? Let's see. Trump is still live. Yeah, he's still live. He's not talking, but the stream is still up. Okay, let's see. Some other things I want to pull up. Patrick Boyle had a good video. Bitcoin should go to 0 long-term as a value haven. I mean, look, if the market wakes up one day and says everything we thought about Bitcoin was completely false, like, yeah, it could get very ugly. Granted, Bitcoin has had many of these moments in its life. It's persisted. Let me see if we can get anything from this Saylor interview. Let's see. Let's see right here. Let's see if we get a little something from him about what's going on with Bitcoin.
What do you say to those out there who feel disappointed by the bull market that we didn't go higher than 126,000? And what is your reasoning for why we didn't get to maybe some of those price predictions that a lot of people wanted?
I think the market is evolving. The entire ecosystem is evolving and seasoning. And if you look at all the dynamics, the derivatives market is migrating from offshore to onshore, and it is maturing. And so as derivatives in the US regulated markets grow, that strips some of the volatility off of Bitcoin and some of the upside off of it. It damps the upsides. It also damps the downside. Instead of an 80% drawdown and an 80 vol, you get a 40 or 50% drawdown and a 50 vol. So you're seeing volatility damped on the upside and the downside by the seasoning of the markets. But you also have a situation where the banking establishment is embracing Bitcoin at a progressive but a slower rate than people with short attention spans would like. It'll take the banks 4 years, 5 years, 6 years before they embrace an entirely new asset class. People would like for Bitcoin to be recognized in 4 months. But if the banks take 4 years before they start to bank it, extend credit on it, acknowledge it, and handle it, trade it, custody it, etc., then that means that what you have at the top of the market is $2 trillion worth of Bitcoin, probably 1.8 trillion held by retail investors or offshore investors, and they cannot access the traditional banking system. They're in the.
Let's see what he says about his cost basis on Bitcoin as well.
So before your final thoughts, I just was curious, you don't seem bothered at all by cost basis. And a lot of people right now are trying to find the bottom. And obviously a lot of people are looking at the technical charts, but you just seem unfazed. You're just buying at any price. Can you sort of address that for those, especially who are like, well, if maybe you think it's going to go lower, why not accumulate at a lower cost basis?
Well, you could think of us as dollar cost averaging, but the key point is we're using equity. We're not taking out a loan. Okay, so when we're buying Bitcoin, if we sell equity and then we buy Bitcoin, then we bought the Bitcoin at 100,000 a coin. If we bought the Bitcoin at 200,000 a coin by selling equity, we're simply swapping. We're doing a perpetual risk-free swap. We're swapping equity for Bitcoin, right? When should you swap equity for Bitcoin? Whenever it's accretive, right? If Bitcoin traded up 10%, but our equity traded up 25%, then it's accretive. It's profitable to swap the equity for the Bitcoin. If Bitcoin.
Once again, Saylor continues to say it doesn't really matter what the price of Bitcoin is based on the leverage they're using to accumulate Bitcoin. They did buy more Bitcoin today. I think they're about 650 Bitcoin at 67,000 was the price they bought it at today, or bought it at last week. 592 Bitcoin at 67,286 they bought. They now have 717,000 BTC. 76,000 is their average on Bitcoin. Little bit of a green candle bouncing from the lows of 680, as you can see that right there. VIX also just fell by about 5%. VIX was up 19, now it's up, actually fell 7%. Now it's at 12% up on the day. So maybe that's enough pain for the day, potentially. Tesla trying to recover, but still below 400. SPY 681 again. There's that bounce. American Express still down 7, but a little bounce off 317. I mean, all these names are still decimated today, regardless of any small green candle. Microsoft, little bounce on 385, but still at 386. This is the nature of the market, guys. This is the nature of the market. One day it's SaaS, one day it's fintech, one day it's SaaS and fintech. One day it's advertising companies. SoFi, by the way, Tanner just tweeted, is now below the market cap requirement to be eligible to join the S&P 500. SoFi needs to be above 18 before the next time the committee decides to even have a chance to get into the S&P. Goodness, dude. Goodness. This is what we're dealing with here. ASTS announces it has entered into an agreement with the U.S. Space Agency for the Europa Track 2 Commercial Solutions Program. Maybe that's why ASTS catching a bid right there. As that's up 4%. Now, see, going net short after all this selling, I still don't know if that makes sense. Like, if you're going to short SoFi at 17, it's down from 27. So, I mean, if you're expecting it to go to 14, like maybe that happens, but I think there is more risk to going net short here, especially with the S&P kind of still holding the levels it's had for the majority of the year. But obviously, it's creating a lot more pain. It's kind of crazy, dude. Any sector you went into this year, besides memory, I mean, let's list them off. Space, it depends on when you entered, because if you bought ASTS above 100, it's not pretty. Rocket Lab was chilling above 80 and 90 for a good month before it got hammered. Not pretty. Space has been hit pretty bad. Rocket Lab is 60 to 90. Quantum has been decimated all year. It had like a couple weeks of love in January, then it got hit. Nuclear, Oklo was almost at 100 in January, back to 60. That got hit. Software obviously got hit. Fintech got hit. Crypto got hit. Data centers, depending on, Applied Digital, you got hit pretty bad because Nvidia sold their entire stake. Nebius, I mean, if you bought above, 110, maybe you got hit, but realistically, Nebius has been kind of range bound. So I wouldn't say you would have to be selective with data centers, but Oracle, which is sort of the poster child of that got hit. Big tech has not been a winner outside of Nvidia in terms of not losing money. Nvidia's flat year to date. Google's also relatively flat, so I guess that's okay. What didn't get hit? Gold and silver have done well, but if you bought at the top 3 weeks ago, you're still back holding. Consumer discretionary, I guess, is doing okay. Defensive's doing okay. And then your utilities are doing okay. But pretty much every growth sector, got hit hard. Software, nuclear, space, quantum. I mean, some of the drone stocks, but again, if you bought Ondas at 14, it's not the best. Now, if you got Ondas at like 7, you're holding okay. It's just been very hard to find a spot to hide. CrowdStrike down 10% right there. Memory, though. Memory has been the winner. SanDisk up another 5% today. Why is PayPal halted? Up 3.5%. Uh-oh. Is Amazon buying them? Is it happening? Are we getting a PayPal acquisition? What do we got? What's the news? What is the news on PayPal? Why the hell would PayPal get halted? PayPal is said to attract takeover interest after stock slump. Okay, but hold on. Who's saying it? Is PayPal saying that? Or is there some private equity firm saying that? PayPal might be at a conference right now. They might actually have hinted towards that. PayPal is said to attract takeover interest after stock slump. Well, first of all, yeah. I mean, the stock is really cheap and management obviously is not doing the best job with it. So you would imagine some activist investor, some bigger company is like, hey, we will buy it on pennies on the dollar. But who's BBG is reporting it? This could also be a nothing burger because there's no price, there's no acquisition offer, there's no rumored company. It's literally just PayPal is said to attract takeover interest after stock slump. That's it. How much is fair value, Mitt? It's a good question. Market cap's at 40 billion. They're going to buy back the majority of the company in about 5 years. I mean, a fair value that I still think would be discounting it is 60. When I did the numbers when it was 60, that's when I thought it was still incredibly cheap. I don't know if they get another $17 a share, but if they can negotiate 55-ish, I think you would have some shareholders that are at least happy with that. Granted, again, this is just a rumor. We have no actual evidence that someone has offered anything for PayPal. That's crazy that it got halted, though. There were that many buyers that came in just off the... That means as soon as that hit the tape, people came in and started buying stock thinking that there's going to be a buyer soon. Imagine if Elon buys PayPal. Well, SpaceX would have to buy PayPal at that point, because X is now inside of SpaceX, and SpaceX would only have the money to be able to buy them. I don't think Elon will, but I mean, it would be an asset that they could potentially turn around inside of SpaceX, and maybe that helps fuel the IPO as well. Microsoft's still down 2%. GameStop buying PayPal. I mean, Ryan Cohen has been rumored to make a pretty big acquisition soon. I don't know if PayPal would make the most sense, but it would be kind of crazy if it was PayPal. It has to be one of the big tech companies. So logically, that makes sense. But do we think they're going to be able to actually legally buy them? Like, Microsoft barely got Activision Blizzard. Like, I don't know. If Google wanted to buy PayPal, I wonder if the FTC would be like, no, like, you're not going to be able to conglomerate that much power in the payment space underneath a tech company. Although it would make sense for Google or Amazon to take them out. Showing 44.50 on PayPal. PayPal halted at 43.11 on Webull. VIX, by the way, continues to go down. It's only up 10% now, so that's good. This thing's going to explode if we actually get a name that's rumored. Right now, it's just the headline. If we get like a Apollo or a KKR or, I don't know, maybe an Amazon. Yeah, that's the headline. PayPal said to attract takeover interest after stock slump. I wonder if PayPal themselves said that at a conference, or who started this rumor. Remember when Papa John's, there was a rumor that Papa John's was going to get bought out? That ended up being fake. So, I mean, it has happened before where you have these acquisition rumors, stock goes up, it's halted, and then it ends up just being purely fake. So that is something that could play out. Bloomberg says buyer interest in PayPal still at preliminary stages and may not lead to a transaction. The People caution. A representative for PayPal declined to comment. All right, I guess we're going to find out. Are we unhalted on PayPal? We are unhalted. Look at that, 10%. 45.50 on Mr. PayPal. 45.50. There she goes. Let's see if this lasts, folks. Does this actually have the momentum to hold? Or do we start seeing the sellers finally say, I'm out? I mean, if you bought it at 40, 45 is not a horrible return right here. $45.23 on Mr. PayPal. It's a rug. I mean, PayPal has been a rug so many times. So yeah, I would be a bit more skeptical than not. Now, granted, the more conversation that comes out about an acquisition is becoming more serious, the more people, I think, want to play the arbitrage. But we're going to have to see. Palantir still down 4, AppLovin down 9. Webull's down 3, Raytheon's flat, Duolingo's still down 7. I mean, we're not really seeing the SaaS recovery yet. IGV, very, very small bounce. But everything else is still pretty red. S&P 682. I think that's pretty much it for us. I'm trying to see if there's any other headlines. Trump is not live anymore. Up. Do we have Microsoft headline? No. Yeah, this PayPal stuff's the biggest. Chris is long PayPal spreads. Now, again, Chris's target is 90 by December 2028. I'm sure he'd be happy with an acquisition, but he also really does think this thing could go a lot higher. Imagine Microsoft buying PayPal. One dead SaaS company, quote unquote, buying another dead fintech company. Be hilarious. SoFi back above 18. Nvidia just back above 190. All right, look, I mean, it's 11:30. If the majority of the pain for today coincided with 680 on the S&P, which we're barely above, maybe that's it. We're at 682 now, so at least we do have a bounce. Maybe all's clear, but obviously this could reverse pretty quickly, like it has the past couple weeks as well. Bloom Energy, that's up a little bit. There you go. 4% getting a move. Imagine PayPal buying PayPal. Yeah, the rumor is just PayPal increasing their buybacks. Imagine that's the rumor. All right, folks, that's what we got for today. That's what we got. I'll be live in the close. We got HIM's earnings. We'll see how that goes. And Kratos, HIM's and Kratos defense company, drones, HIM's, more in the healthcare space. So we'll see what happens with those two after the bell. We'll see if we get any more tariff updates, if we get any potential new negotiations around these trade deals based on what Trump said this morning around the Supreme Court. S&P 682, we get back up to 685. It's not too bad. Nvidia still holding 190. Again, Nvidia earnings is important. And then tomorrow we have the State of the Union, which is also going to be very important. And we'll be streaming that live after Technical Tuesday. Yeah, Claude buys PayPal. That should be the real headline. Which, honestly, would it be that crazy if they did? I don't know if it would be that crazy. All right, word of the day. Let's see what we got. Word of the day. Okay, I feel like I've heard this word before, but I don't know exactly how to say it. Perspicuity. Clarity of expression, the quality of being easily understood. His pitch had real perspicuity, complex ideas distilled into a clean, decisive action. I don't think I did that bad on that one. Perspicuity. The VIX is falling as we speak, which is good. Okay, let's see how you say this.
Perspicuity.
Okay. Pretty reasonable. Perspicuity. That's what we got. All right, so Jason will be going live, by the way, on today, because today's Monday. So for those that want to get some thoughts in with what Jason is saying, let me put his link right there in the chat. And you guys can head over. I think he's going live in like 5 minutes. He'll be live tomorrow for Technical Tuesday as well. But if you have any specific questions, he's going to be live in about 5 minutes. You can ask him some stuff, get his trade plan for going into the week. We'll be live again on the close. Again, tomorrow we have a lot of earnings, State of the Union as well. Today we'll be live on the close and cover HIMS and Kratos. Also, the daily recaps will be back. I know it's been gone for like 2 weeks, but the daily recaps will be back. So many people at the New York meetup said they love that, and I love doing it. It's just the past 2 weeks have been freaking crazy. So we will be back with the daily recaps posted every day around 7 to 8 p.m. Eastern. And hopefully that'll give a 20-minute summary in terms of what's happening throughout the day. And then finally, again, LA meetup. That link is live. June, Singapore details I will have soon. But LA, March 28th, putting that link in the chat. I will see anyone who's there on March 28th. All right, that's what we got. Hopefully that was enough of the pain for today. We'll see around 1 p.m. if this reverses. 682 on the S&P, getting a little bit of a bounce. Again, Jason's going to be live in about 5 minutes. You can head over to his channel if you have any specific stocks you would like some TA on. And I'll be back
later on the close. All right. Thank you, everybody. Appreciate it. I'll see you guys on the market close. Bye, everybody. Have a good one.